Sure. Yeah. Okay. So a debit spread, you have to sell to close the position. When you do, you have to sell to close both both strikes. Um, so can you see my screen? Like, are you able to see the stuff popping up on the? Or so you did like a buy and then you did a vertical. That's a debit spread. Okay, and then your position on monitor, it'll be here. Then you'll right click it and it'll say create closing order. And then over here it's going to say sell, and it typically say sell. I should have had something. Let's see. Here I'll replicate something for you to see. Just give me one sec. Let me get this on demand going. All right, let's see here. Just gonna give it a sec to load here. Okay, so you did buy vertical. It pops up like this. Confirm and send. All right, order is should be in. Let's see. Oh, it's got to initiate first. Let me just do market. All right, so now you see it here. So then what you're going to do is create closing order, and then it says sell vertical, right? And it's got both your strikes here separated by a slash, a forward slash, and then it says at whatever the price is, right? And it pops up and it comes in as red, and that right there is what you want to do. Confirm, send, right? And there it's gone. Sure. So I wouldn't do that. I'd stop paying for that. Um, yeah, you don't. I mean, I don't think that it's really needed to pay for something like that. So look at there's a tab or a pull down that says how to execute plays on the left side. Right, it's below the options flow data. Click on that, and there's a TD Ameritrade tab. And you click on that or channel. And I posted something in there that says if you have delayed data on TOS, make sure you fill out all required applications. And this PDF here shows you how to do that. You're welcome. All right. Okay. Um, and if you still have the issue after that, let me know. We'll see if we can figure out what's going on. You're welcome. I would. I would. I don't use it. I don't know anybody that does on the server. So Yeah, no, that's not how you get real time data. Definitely not. Okay. Who's next? Okay, two of you. I'm not. No, I mean it's in a downtrend right now. If it breaks above 5650, then maybe it's got to break above 5650 and then 6250. Then we'll see it in the 70s potentially. I have no idea what's going to make that tank. Unfortunately, I wish I did. Nothing makes sense honestly why things move in the way they move, other than like currently, like right now, like Moderna. That's moving because of COVID, and it's moving up because they're talking about vaccines and releasing stuff. So that's expected, all right? That's what I expected to happen. But some of the other stuff, like there's just no reason behind why things are moving the way they're moving, if that makes sense. Yeah, I don't know enough about the particular situation to really weigh in too heavily on that. Um, I mean, it could. I don't dispute it. Let's say that, but again, I don't know too much about that whole scenario to be of any real help on what that specific thing's going to do. You know what I mean? Yeah, I would more concentrate on the stock itself and its fundamentals if you're interested in it like that. I mean, I don't like Chinese stocks, right? I don't like the Chinese government because they manipulate their stuff, right? So they can manipulate something to just go into their favor, but the real truth behind it you don't know. At least stocks here in the US, they're regulated by the SEC, so they have to show proof of some of the things that they've gotten. If they don't, and it turns out they're lying or being deceitful, then they can be taken off the market. And that's kind of what's happened. Um, I think not too long ago, Trump went after some Chinese companies because they were fraudulently releasing data, and he took them off the market, or he pushed Congress to take them off the market, something like that. And I know they all started tanking at a time in the past because of it. Cooler, can you please mute your mic? And I got Luke M. Please mute your mic. Quasimodo, please mute your mic. I will be server muting you guys if you don't. NEE. It's at short-term support. Um, sorry, I'm trying to mute some of these people that have their mics. Can't really listen to myself. Yeah, it's a short-term support. It looks like. Let me just draw this out. All right, so you got a handful of areas that are acting as support, like here, this one, that one, and then just basically these point here. So I mean, you got some support. Looks like there is a downtrend, right? So high here, lower high, equal high, lower highs. But let me go a little bit closer in. So this to me looks like a downtrend pattern, a bearish pattern, at least in a 30-day chart. Anytime you see something like this where it's hitting a level and bouncing off of it, and then has a trend in one direction from the other side, it usually indicates a downward trend. Like so, this one, for example, to me indicates a bearish trend. All right, I'll show you an example of a bullish one. Let's go 90. So here's Tesla. So you see it kind of gets near that level up there and then falls. But then you've got the trend itself going up, right? So this is a bullish pattern, and that's a bearish pattern. Does that make sense? You're welcome. Now, it may not be, right? That's just what I'm seeing here. Yeah, I definitely see that, which is this right here, for sure. See that. The one thing that I have noticed though is the fact that it hit a high and then it's creating lower highs. And that's not a good thing. And same thing with lower lows. It looks like there's a handful of lower lows in there as well. But it could reverse and go up, back up. I I just think when I see something like this, you've got this one line that goes straight across where everything's bouncing off of it, and then you've got the other line, whether it be down or up, it's just creating a trend, right? And same thing with what I showed you with Tesla, it was an uptrend, whereas this one's a downtrend, right? I mean, Tesla here, right here, it's hitting this resistance level, but then it's got an uptrend, right? It's creating higher lows each time it hits a low. You're welcome. Hey, on who? Um, what do you want to check? Yeah, something went wrong with it. Um, Apple's kind of doing the same thing that Tesla was doing. I think Apple's in a bullish position, to be honest. It's not as clear, but I mean, 1 second. It's not as clear, but I do see some kind of upward. So if I start down here at the low, I still think it has more to another day or few days for it to consolidate some more. So if you notice here, it hit a high, fell really down low, and then it bounced. And each time it does a movement up and down, it's creating it's yeah, it's swinging, but it's consolidating. As you see here, they're getting smaller and smaller. So I think at some point here, it's going to consolidate to a certain level, maybe around 120 to 122. It's going to stop doing what it's doing, and then it's going to go in one direction. And in this scenario, I think it's going to be up. I think the catalyst for Apple for the short term is going to be Apple iPhone sales. Um, so typically that's what does it, right? Um, so I do believe that they will jump and retest their highs at some point here. The next, not really sure how when that date comes, but within a month, I think we'll see that. Yeah, I mean, I honestly believe that options you do that. Yeah, you do that with options. You get in and out as quick as you can, for sure. Yeah, Tesla is one of the most volatile ones out there. You, well, the thing with Tesla, you got to have a lot of money to play Tesla, and you got to have a lot of patience and get rid of your emotions. But also, Tesla is one of those where if you can't handle your emotions, you should buy shares. You shouldn't be touching options. But you get caught on the wrong side of it, you're gonna lose. If you're in an option, yeah, you're gonna lose crazy money. But shares, I mean, long term, I see Tesla going up. But yeah, right, right, right. Well, the thing with cannabis, and I've had this discussion with people before on Live Q&A, where until cannabis becomes legal on the federal level, it's not going to hit every state. That's the first step for it to hit every state is for the federal level to decriminalize it and allow it as a recreational drug, like tobacco and alcohol. Because then they're going to want to regulate it. Then they're going to want to start making getting their tax dollars off of it. And when they do, then it's going to be, you'll see these big companies like Altria and Philip Morris jumping in and trying to take a big market share of the cannabis market because they're the tobacco owners, and they're not gonna just sit idly by and be like, oh, we'll sit this one out, and you guys, you little small cannabis guys, you can just do your thing. They're probably gonna buy off a handful of companies that are well established and just take them over. Well, those states it's legal. Pretty sure those states it's already legal in Oregon, Washington, New Jersey. There's quite a few. Yeah, absolutely. It's still going to take some time though, for sure. Definitely a lot of that going on. That's cool. Did you have any more questions? You're welcome. Oh, cool. Welcome. Okay, it sounds like somebody was trying to talk. You're kind of going in and out, Sandy. Y- You're going in and out, Sandy. I can't really hear you. Maybe try again. DKNG you want to look at? You're still kind of going in and out, but DKNG has hit a low down here at 35. Looks like a good support level, strong support because it reversed a trend. It's creating higher highs and higher lows. Although um, this looks concerning. So will it hit $60? I don't know. That's kind of what I was getting at here. Is this area looks concerning, right? Because it's getting to a high and then it just went down and created a lower high. So if this continues doing that and it gets below this support level right here, that's not good. That's going to start going back down. So you got to pay attention to this right here, right? Always pay attention to lower highs and lower lows. That's a downtrend. Higher highs and higher lows, that's an uptrend, right? So I'll explain it with this. All right, so here's a low, here's a low, here's a low, right? And then here's a high, here's a high, here's a high. And then ultimately this section here is a high, that long rectangle, that's a high. So these are all indicators of an upward trend, right? Low, high, lower, or higher low, higher high, higher low, higher high. This low is not I mean, it is lower, or I mean, higher than the previous low. It bounced again, hit a higher high, but now it's created a a lower high, right? So it looks like it's starting to do this. We call it cresting motion. Cresting motions, like up here, right? This right here is a cresting. It hits the top and then starts to do its crest downward. It could be doing that here. Now, if this goes sideways and then breaches this $53 area and stays above it, that's a trend continuation. And then you could potentially see it hit 60 at that point. But again, you're gonna see there's gonna be resistance at 58, there's gonna be resistance at 60, and there's gonna be resistance right up here somewhere about 61, almost 62. So those are gonna be resistance levels. Does that help? You're welcome. Same thing. Lower high. That's a lower high. Hit a high, went up, it fell, went back up, but it didn't go higher than this one. It stayed below it and starts going back down again. This is going down. I wouldn't be surprised to see this go further downward. The good news is that I'm seeing again is, let's just, before I say it, it looks like it's bouncing off the 50% retracement level. So that's still good news. I like that. But you've got a downtrend look here. You know what I mean? Like, again, the lower highs, the lower lows, they're pretty strong. They're very telling on the direction. So this is kind of a conflicting one for me. It bounced off the 50% retracement, which to me says that's a strong bullish indicator, but it's doing this lower high thing as well. So I'm kind of on the fence about something like this. I wouldn't get into anything like this. I mean, if you're already in it, then that's one thing, but to enter a position on something like this, I would be a little wary. But I think that it could go either way. See what happens tomorrow. So you got a key support level right here at 3160, 3150, or maybe a little bit. Let's see. Let me get a little bit closer in. Right here, 2848. If it breaches that, then this 2672 is a key support. If it breaches that one, expect it to fall further. Okay, you're welcome. I have not. Um, there's potential. I mean, AMD's been killing it. There's AMD's been uptrending for a while, to be honest with you. Um, since it jumped from Intel having bad news, it's just been there's a lot of key support levels here though. We could definitely see this fall some more. It has a lot of resistance up here. Let me just go back closer and this is a resistance level. See if I can go further. So I I do think this is going to continue uptrending. Um, I've got this trend line drawn out right here, as you can see it, right? Let me see if I can. I'd expect it to follow that. If it breaks through it, then you're going to see it start going the other direction. But it's not going to be like way down here. It'll probably hit one of these strong support levels. I mean, I'd say a super strong support for this stock is going to be $77, $78, 77 and a half, and then it'll bounce and then start going back up and it'll breach highs. AMT's got strong in a strong position. Well, just more market position, right? They're beating Intel. So that's their main competitor. I mean, you've got Nvidia that's trying to get into the same stuff basically. Um, so yeah, right there. That's the trend line that I'm seeing. So you could very easily see AMD come down to the 90, 91, 92 area, but then once it comes back down in this area, I think it's gonna jump back up and start breaching highs. Now, something's gonna make it fall. It may not itself may not make it fall, but like the whole market having a bad day could make it fall. You know, just people exiting tech could make it fall. And when it breaches through this trend line, that to me is an indicator that it's going to continue further. And just look for key support levels. Like um, I'd say this one's a pretty good one. This one's a really good one. And then I can even honestly go way across here on this one. You see it creates um, multiple has multiple support levels right here that are confirming this strength. Um, I'm not gonna say yes or no. I'll let you decide. I'm just telling you what I think is gonna happen. You're welcome. So I hear a lot of you guys talking about calls that are above the current price that it's at. Like, so you said 185, right? Did I hear that right? So let me ask, why did you choose 185? Is that where you think it's gonna go? No, it's not downtrending yet. Well, I'll show you why. Let me clear all this. So first I'm gonna draw a trend line. Okay, and now I'm gonna draw support lines. I won't go way down here. There's no sense to go that far. Okay, and now I'm gonna draw resistance lines. Right. So I'm just gonna put an arrow on resistance over here so you can differentiate the two. In a lot of scenarios, resistance acts as support, right? It's weak support, but I still would consider it as a support level. If you see the stock drop below this point, to me, that's a, a bearish indicator, and that would also coincide with this trend line, right? So if it goes below these two lines, that's a bearish position at that point, in my opinion. But what I think you're going to see here is it might fall a little bit more and then start going back up. I mean, if you look at its recent history, that's what it is doing, right? It goes up, falls a little bit. It does about, I guess this is a 50% retracement. That one's probably about a 50% retracement. Let's see. I'll do a quick Fibonacci on these. Yeah, so it's pretty close to a 50% retracement on this one. And start this. Yep, another 50%. No, that one's a 61. Sorry. And then we start here. So I think I could see it come down to the 166, 161 area, potentially. It may not. It may do like a 38% drop and then jump. But these are going to be key levels. These three, in my opinion, are going to be key levels. And like I said, um, uh, previous resistance levels can act as support. And here's a perfect example on the 50% retracement level. You see that 50% level? This resistance point is a support level, especially when now that you've got the Fibonacci involved. That 50% retracement is a good indicator of bullishness if it bounces off that level, and it can. That can act, like I said, as a strong support in some scenarios. And when I couple these two together, resistance plus the 50% retracement, now it looks stronger to me to say this could be a bounce area. Now, keep in mind, 50% retracement is not Fibonacci. It's just part of this drawing. Fibonacci is the 23, the 38, the 61, and the 78. But the 50 is just a 50% retracement is an analysis by itself. It's not included in the Fibonacci. Does that help? And another thing that I would say is when you guys do options, when you're picking strikes, don't pick a number that you think the stock's going to go to. Pick a number that you can afford that has the most open interest that's as close to at the money as possible. Does that make sense? Okay. So the reason I recommend that is because when you pick something that is close to at the money as possible, that has the most open interest, and um, well, the reason I would suggest that is because it's going to be easier to see money, see profits. Theta decay is going to be less in percent wise, right? So here's an example. All right, so this one, I'm looking at December 18th expiration date, 175 strike. This costs $380 to get into, right? So 380 times 0.2. Sorry, that's not right. 0.2. Damn it. Just give me a sec. Trying to remember how I got this. So there's a percent here. 12. Okay, I think I got it. Sorry. Just give me 1 second. It's been a little while since I've done this math, which is obviously not my strong suit. Okay, so this strike, 175, it's $380 to get in, and Theta Decay is $12 on this position, right? That's a 3% loss on that position a day currently. If I go out to the 180, right? So the 180 is $192 to get into, and it's a $10 Theta Decay. So 10 divided by 192, that equals a 5% loss per day, right? So if I go a little further out, let's say I go to something that's really cheap, 31 bucks on 195 strike. Or better yet, let's go to the 200 because it's got better open interest. So it's $18 for that position, right? 2 divided by 18 is 11% Theta Decay. You see? This is why you do not go. You want to try to stay as close to at the money as possible. Yeah, I mean, $31 or $18 is really cheap, and if you lose, it's not a big deal. 18 bucks versus 380. I get that. But if you choose right and it starts going up and you chose this $380 position versus 18, 100% return. Now think about this. If your position just goes up 100%, and they both go up equally 100%, right? 100% on 380, you'd be at $760 position, whereas 100% on 18, you're at $36, right? So, like I said, what you can afford with the most open interest, that's what you're looking for. And when I say what you can afford, I say 5% of your account value, no more. So let's say you've got 2,500 bucks. That's a $125 position. So in that scenario, I would say the 182 strike. And since the open interest isn't that great, I go to the one that just below it, the 94. So that would be the position I would choose. If I've got $2,500 account value, this would be the position that I choose, $94, right? So it fits my 5% number, it fits with open interest, and it gets me as close to at the money as possible. Does that make sense? Do you got $2,500 in your account? Because then you're right on the money. Then you're doing exactly what I recommend you do. Because the 5% number for your total account value is very key. Like you don't want to overcommit yourself. You don't want to do 15% or 20% of your account, because if you do 20% of your account, you've got 5 trades. If you do 5% of your account, you've got 50. Is that right? Or is it 25? Sorry, hold on. 100 divided by 5. 20. You got 20. So you got a lot more chance to make something if you lose one or two, right? And with option buying, let's say you buy a position at $94 and that's 5% of your account and you lose 50%, but then you get into another position that's 5% of your account value and it goes up 300%. Okay, well, see, you've just gained back your money and then some. So you position yourself not to get crushed, basically. You live to fight another day. Now, if you're just continuously making mistakes and not choosing the right stuff, then that's a different problem altogether. I mean, certainty in a position is a tough one to say. I mean, there's times when I see things and I'm like, this is the probability of this bouncing back up is high, right? And typically it might, but there is no 100% certainty that it's going to. So you just increase your risk by overloading a position. So if you got $10,000, right? Let's say, for example, you want to play target. and you got $10,000, right? Let's see. That's $500 position. And let's say, you know what, I want to get 3 contracts because I don't want to just, I want to shave one as I get 5 or 10% return. I want to shave another one when I get to 20 or 25, and then maybe let the last one ride and hope to get 50 or 100% return. We'll see. In that scenario, you could go with this strike, the 180, right? Um, or you could say, you know what, I just want to get 2 contracts. You could go with this one, the 177.5. So it really depends on your strategy, right? So a lot of things you got to calculate into what you're trying to accomplish, and all of these things I just went over is what makes choosing your strike important. So if you got all this information, you got a strategy put together, and you follow it, then you're going to produce more successful results, in my opinion. Granted that your option direction is correct, and again, that's a totally different analysis altogether. Just choosing your strike is one thing. Choosing the type of trend direction and technical chart analysis is something else entirely that you have to also incorporate in why you're choosing up here or down here, right? You're welcome. And I am recording this, guys, so I'll have this posted on YouTube maybe by the end of the night, so you all can rewatch this section if this is kind of what you're really interested in learning. You can rewatch this portion of the video specifically. If you're a little confused, you can go back, replay it, and stuff. So okay, who's next? I think it's where the shorters have to cover their positions, and this is going to make the stock bounce in one direction, typically up. Um, well, maybe not necessarily up, because you can short either direction, just like you can long either direction. So option buying is long, going long. Shorting is option selling. Right. So um, when shorters have to cover their position, that's what's called a squeeze. It's more in numbers, not a scenario. So there's a thing called short volume or share float. Those are shorting numbers, if that makes sense. So in one of our channels here, you can actually do, let's see, I'm trying to remember, I haven't used it lately because I'm not really interested in that kind of thing, but let me see if I here, I think this is it. Okay, so on the trade section, you've got a chart and commands channel. In that channel, you can do this. I'll type it out. So, well, it it got rid of it. Only put the result, but basically you type exclamation mark short vol, short VOL, and this shows you how many shorters are in the position and how many are long. Right. So I did Apple, which is that very bottom one there. If you are you looking at the channel? Okay, so the red are the shorters, the green are the long people. So when this red number gets really high, there's a potential short squeeze happening. And if the stock, so let's say for example, people are shorting Apple at the top. And they're saying, "Oh, we think it's going to go bearish," and there's a lot of shorters. But then some hedge funds come in and say, "Well, we want to go long," and they outbuy those shorters and those positions go against the shorters, even though there's more short volume, that's a potential scenario of short squeeze or a squeeze, because now they're forced to have to cover their position because they're shorting it, and the stock price is going in the money for them. And when you're shorting something, you want to be out of the money. You're welcome. Okay, who's next? Okay. um, let's see. Hmm, I'm not sure. It, potentially using the 61.8% level. Um, the only thing I can tell you here is if it breaches this high with strength, 280, then you're going to see it uh, get more resistance at 297 and a half. So maybe like a 15 or so dollar move, if that makes sense. But where it's at, um, so as I was saying before, you can see resistance levels act as support and from history, but in this particular scenario, there's potential for support levels acting as resistance. Because if you look where the stock is, if this goes down tomorrow or goes sideways and then down someday in the future, near future, this is actually going to become a resistance level. Because there's nothing here. Like at this support level right here, there's nothing supporting it to the left. I mean, I can go further out, but there's nothing. And again, here's another good example of support acting as resistance. So you've got multiple levels here. Oops, that are, so you've got support acting as resistance, but then you've got resistance here acting as resistance. It depends on the direction of the stock. Also depends on volume and all that. And you can see down here volume, really big loss of or there's really big seller volume here. Obviously, I mean, look at these. We're looking at 30 million. But this is the trend we're looking at. Right, so I mean, we could see it again potentially touch this trend line. But it's what this stock does in the next week or so, week or 10 days maybe, since tomorrow is Friday. So I think we're going to see it fall tomorrow. Just my opinion, because of the direction here, the trend analysis. And again, like I said, you've got support here, but it's fallen below the support, so that makes it resistance. And then you've got resistance further out to the left that it's touching, right? It can easily bounce off of these levels. So you've got support acting as resistance potentially, and then you've actually got resistance over here that can, let me get rid of this Fibonacci. Then you've got thing. So this point, you have support acting as resistance and resistance acting as resistance, right? Because it's fallen below the support level. So these support levels no longer are valid support levels because it went below it. And it's staying below it. It hasn't went back above it. It's right on it. And then again, you've got resistance levels that are acting as they should, as resistance. So if I get in closer, say the 20 chart, this is barely above that resistance or support. So this is the support line from to the left. And it's again also resistance further to the left in time. So this could go either way. It's at a um, make or break point, right? This is a very key level, and I would not trade this at all. And I personally think that it's downtrending because if you look again from its high, it's created lower highs. Um, the only thing that would make me think that this is a bullish position is the fact that you've got just one area right there that gives it bullish indication, which is higher low. So it hit a low, created a higher low. That's the only thing I'm seeing in, as far as bullish here. Everything else to me screams more bearish. But if it stays above the support level and goes further up, okay, then we're gonna then I can say I feel more comfortable thinking of it as a bullish position. But it's got to break through this trend line to truly be bullish, in my opinion. So towards the top of this one here. So I did that because you have to account for the other top points here. And if you go too much into one, then you're invalidating it. Right? So for example, if I did this, if I did something like this, you're invalidating this one. There's bodies in there. Wicks, okay, wicks are fine, but bodies, that's different. So let me go to a 30 here just so you can see. Yeah, I mean, you see I have bodies here. And this one even cuts through a body. This would be okay because it's just barely in a body, but this one it goes through multiple bodies. So to me, that's an invalidation of a trend. So I've got to I try to incorporate as many as I can on that line without going into a single body if possible. You could theoretically use this line, I guess. It's not all that off for the simple fact that you have this huge drop on the bodies that it went through, right? So you could use that, but for me, I don't particularly like to go through bodies. That's the only reason why I didn't draw it closer to that one. But I mean, you could. It's not. There's no real right way of doing it. It's just how I like to do it personally. That's all. You're welcome. Okay. Um, it's got an uptrend so far, and I think you'll potentially see a bounce unless tech does bad. I think there is potential for it to go to do that. Let's see. I'm seeing a not so good pattern here on the short term though. So this right here, this right here, and that. That's a head and shoulders. That's a bearish indicator. So again, this one is kind of like the rest. It's 50-50. I see an uptrend, but I see a head and shoulders too, and that's not good. That head and shoulders typically is a lot stronger than trend lines. So I don't know. That one's a tough one. I mean, I am seeing a lower high, but the low is still a higher low so far. If this low breaches this one here, well, closer. Yeah, if it breaches that low, so this is a higher low. It's got to maintain that and keep going up. If it does not maintain that, that's a trend direction change because again, higher lows, higher highs, that's a bullish direction. Lower highs, lower lows, that's a bearish direction. You're welcome. Spot. This is one of those that have been pumping hard recently, I think. Yeah. Well, you definitely got in at a high. I never recommend doing that. Um, I would set a stop loss or mental stop or a physical one doesn't really matter. If you lose 20%, maybe you should consider getting out of it because there's no point to hold on to something unless you got like a leap and you got something that's 6 months out or something like that. Then that's not a it's okay to hold something. But if you got something that's going to expire within a month, you should consider taking uh, some form of a stop loss because you got in at a high and after hours. It's like after hours. Let me get closer. Not quite after hours, but so you've got some short-term support in these levels. If you can maintain that, well, right now it's at support, honestly. And if it maintains that, you're in good position. You're in good shape. But if it breaks through these, you know, maybe you should consider taking a loss here at like 308. 308 and a half. Because if it goes through that, then it's down to 282, 283, and that's a huge loss with an option. So yeah, there's a double top there. Oh yeah, definitely. Like I said, I think if it goes through this 308 level, you're looking at 282, and there's nothing else stopping it from getting there. I mean, if you see, yeah, there's nothing stopping it to until it hits 282. Well, you could buy a put where it's at. Let's see. Hmm. Yeah, that's really bad to do, unfortunately. Um, what's your how much did you pay for it? I see. Hard to say. I mean, I don't want to tell you to get into another position that's gonna. I mean, you could try to buy this 280 right here. I mean, you got 378 OI, but that's I don't know what's your expiration. Ooh. It's not necessarily it doesn't matter about your account size. What that means is one of the two sides, the buyers or the sellers, is lopsided. That's all that means. So that means in this scenario, there's more sellers than buyers for this particular strike. This one right here, 360 and 490. Um, yeah, these spreads are really wide, especially this 312. Oh, no wonder there's no one in it. Um, I mean, again, in this 300 strike put, that's as close as I would get if I were you, if you wanted to do puts. I'm not recommending you do. I'm not saying you should or shouldn't. But if it goes below this, I think this is. I mean, if I'm looking at this chart, the 1 hour, I don't see any support here. From when I was closer in the 15-day, I see support. But when I go to the 1 hour, the closest 1 hour, I don't see anything. I think so. I think so. There's potential for that. I mean, again, this is where Fibonacci comes into play, where you can potentially find some other levels that can become a key, right? So if I draw this, let's see, it could stop at the 50, which is, look at that. The 50% retracement level is really close to that support level. So you see how that goes, right? I mean, those two kind of help each other, right? They're really close. Let me just draw this, right? So I got the 50% retracements right here. The support level is just above it right there. But if I use the wick, that's a 50% retracement. So this could keep pumping because it bounced off a 50% retracement, frankly. So I have no idea. I didn't even play the market today. I was doing some family stuff. Um, but this is just a strong resistance level, 332. So I mean, here's the thing: if it holds its level and goes up and breaks through 332, you're going to see it probably gap up again, right? But yeah, it's a pretty strong resistance level at this point. But if you see it break through this support level here, then there's nothing to stop it from falling down here. Yeah, I mean you see what happens when it. So right here you've got three key resistance levels, right? these three key resistance levels. Spots touched it and bounced downward. But here, when it went above it, it ripped above it. So if it does the same thing up here above 332, you expect to see it gap up again. So it sounds like you need to consider where to take loss before you decide to even get into a position so that when it does get to that level, you don't question yourself, you don't hold it, right? And you can, so if I go to the 5-day 15-minute here, let me get rid of this crap. Let's say you didn't get into this position yet, and you're like, all right, I see support here, I see support here. I'm going to put my stop loss at one of these two levels, right? And then you get into the position. And you already have it in your mind that if it gets to here or here, whichever you decide, you're going to take your loss. And let's say that it then does that, it gets down to here, you should be taking your loss. You should not question that. And using support levels as a trailing stop or as a as a stop loss area, I think that's a good way to get out of a position, right? So if this thing, so I could technically say I would take a stop, I'd put a stop loss to where I get stopped out at 306.20. Not right at the support level because it could bounce off of that support. You want to get it just below the support level. That way, if it does go through that support level, your stop should hopefully initiate. Makes sense? Okay. Okay. You're welcome. Give that one sec. I think Eddie Arnold had a question. Um, I don't think it's gonna hit a resistance level. I think it's just gonna do. So if you look at again, I'm gonna use my Fibonacci here. You could, and the 50% retracement level works in both directions. So if it goes to 24 area and then starts falling again, that's a good confirmation that this is bearish. Um, I like this stock at right here. This is support. I've already looked into this one personally. You see, I have my support line here. I think it's going to hit that, and then I'm going to get into it personally. 1470. Yeah. And you could also use this one here at 1525. That one's a pretty good one too. So I'll probably with shares, I'll probably get maybe 2/3 of what I plan to get right here at 1525 ish, 1530. And if it falls lower, then I'll add. So let's say, for example, I want to put $2,000 in this position. I might get about $1,200 worth right here at 15 something. If it goes down to 14, I'll probably throw another 6 to 800 at it. When did it? Oh, sorry, I lost my train of thought. When 2 days ago. Yeah. Okay, so let's since I know that information now, let's do this. 2 days ago, so that'd put it right here, right? So it's at between the 50 and 61, literally right here. It looks like it's having trouble getting through this area. You get two tops. If you look at the a day chart, that looks like a double top. So let's look at a day chart. Yeah, I mean, I don't like to go this close in just because this close is dangerous to try and play anything off of. But when I'm trying to see something specific like this, you've got two double tops basically. I go to the 5 day, 15 minute. It does have a double top in one day. Um, this one, if I draw, right, so you got the uptrend. So if it goes through that line, which it could very well, we're only looking at a small time frame here. So if it goes through this trend line downward, then I mean, I expect to see it come down here, somewhere down here. Like there's nothing stopping it from falling down here. I mean, obviously it has to get through $17 area. So to me, this is in a downtrend, right? So let me remove this again. No, consolidation is sideways movement. Like this right here would be consolidation. That's consolidation. Just gonna draw a trend line here. Let me go further out. Which one looks more drastic? Which one looks more likely? I know. Yep. These are lower highs, and then you've got uh, yes, and then you've got here's a low, here's a low, yep, here's a low, and then a really bad low. So it already was creating a downtrend before that bad news. So it's like it already knew. A lot of market players already knew that that was coming. Somebody's insider trading. So in my opinion, I think it's gonna. No, 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 just sit back and wait. Wait for it to come down to the 16, $15 area, and then go leap. Yeah, definitely wait. Wait on that. I mean, I would say I'm personally gonna probably alert this position if I get into it at $15 and something. So if you see that, then when I alert something, it's probably like I only alert home runs right now. As you can tell, I don't. There's nothing out there that I've alerted in a while. So if I do alert something, I believe it's going to be a home run. So I won't set on alert unless I think it's a home run. Yeah, no, I mean that was good to do, and like I said, I think that this is going to come back down to a lower area, and you're going to be able to get back into it at a better price. So just give it a little time. You're welcome. So I'm actually going to start getting back into credit spreads. So I'm going to move my channel back up into the alert section. So yeah, that's where I'll alert it. But if I haven't moved it up yet, it's found right above this live Q&A channel. It's called Professor Hostel. I'm not sure. Can you guys are you able to like um throw a thumbs up or something like that in here, or y'all, do you not have the ability? Because I'm wondering if that's the case. Because normally I'll get somebody saying thumbs up for like these videos that I posted. I had a lot of people message me and say, "Hey man, thanks a lot." Um, but normally I'll see thumbs up or something. But this channel is new and the section is new, so I'm not sure if anybody can or not. So that's just kind of what I'm trying to figure out. Is anybody able to react with an emoticon, for example? No, no, above it. It says Professor Hostel. Right above voice channel section, you can see the education section, and I'm at the very bottom of the education section. Okay. Okay, so you're not able to react to it. Gotcha. All right. Need to fix that. All right, good to know. All right, okay, was it you that had the question after the previous person? Well, I just want to make sure that I'm getting everybody that was asking. I don't know who it was though, so I think it was. Go ahead. You can ask. The 15 so this point right here. Yeah, I mean, at that point it's like it's doing something that I wasn't expecting, and I'm not going to force myself into a position. I'll just move on and go look for something else. I need the stock to do what I want it to do. If it doesn't, I'm not interested anymore. I'll keep an eye on it, but yes, it could be. I mean, Workhorse. I think they're also with. They might have some agreements out there with UPS. So I know the previous person said USPS, but I remember seeing actual the steering wheels of UPS trucks say Workhorse on them. So they have something going in the works with UPS as well, I think. Um, I don't know. That's. Oh yeah, I'm pretty sure it would. It would go above its highs. Well, like I said, I think it's got support at 15. That's a really strong support area. I mean, 15 and a quarter, 15.50. I mean, it's got really strong support there. So yeah, this part where my cursor is, this is 15.25. Over here it's 17 something, right? So let's say like let me get a little bit closer in. I'd say right here at 1890, that's a support level, but it's a weak one. I think it's a weak support area. There's nothing supporting it. There's nothing confirming that support. I mean, you have a this spot here, all right? That's confirming it, but this is an uptrend. And an uptrend, this isn't a strong support. If the best description to strong support, sorry, that's too far, is when it hits a high. So let's say this one right here, $30.70. It reverses and comes all the way down here to 15 some change, and then changes the trend. That's strong support. Now, this is weak support, these two areas. And if I were to go to the left to try and find additional support on that area, there's nothing, right? There's nothing across here that shows it. Uh, I mean, as far back as you need to, as far back as you find necessary to find additional levels of confirmation, right? So, again, I went all this is a 180, and I drew that support line all the way out here, and there's only 2 points, and they're weak support levels. So to me, that's not something I would trade off of at all. Yeah, I personally won't touch it until it hits 15 and a quarter. But I'm more of a I buy mostly shares, so I don't like going against the overall trend. Long-term trend is up for majority of stocks. So for me, like there is a 3 month trend, there is a month trend, there's a week trend, right? 1 week trend. Um, it's just a matter of what's the time frame you like to trade in, what's the trend in that time frame, and then you find all your confirmation points, right? And if you see something like if you like to get in and out of a position in 1 or 2 days and you think it's at a high, then go buy puts. Or if it breaches this support level that I'm talking about, the next stop is 15 and a quarter, and your strategy is to get in and out of position within a day or two, then yeah, you could potentially do puts. But it's up to the individual to determine their type of strategy and their risk assessment, and everybody's unique. So that's why I don't say yeah you should do this or yeah you shouldn't, because I'm different than everybody else. So support levels. But yes, I don't I'd have to short it if I do off of resistance. If I'm buying shares, I'd have to short it off of resistance, and I don't want to do that. You should look into 5, maybe 10 stocks that you can follow religiously and understand their price action, and then you can trade them and you can trade the range. Right, so you get in at the low, sell at the high, and it falls back down. You get in, you sell it when it goes back up, and you just continuously do that on like one stock. If you watch one stock religiously, you will know its price action. Oh, you're playing with fire. Oh yeah, very risky. Yes, absolutely. Yeah, it's because you don't know what it's going to do, and you're playing off of news, or you're playing off, like you said, a catalyst. You don't know what it's going to do. But if you follow Amazon, for example, or you follow Tesla, or you follow Apple religiously, you know when it's going to bounce off of a certain point. You know when it's going to fall from a certain point. You don't even have to look at the chart no more. You know the price, right? So if you know that off the top of your head, you don't even have to chart it. You can just play it like that. But the guy you're talking about sounds like he's got a scanner and he just goes out and looks for things based off of certain criteria. That's dangerous because he doesn't know anything about it. He doesn't know fundamentals. He doesn't know technical analysis. He's just going off of what his scanner's telling him, and that scanner's saying, "Oh, this is at a certain level or whatever the case." And then he's like, "All right, I'm gonna pick, let's say 50 return," and he picks 10 that he thinks are good after he does some sort of analysis on it. But it's something he's only looked at with for 5 minutes, you know. But if you've been paying attention for a stock for 5 weeks or 5 months, you're gonna know that stock. Um, so one thing you can do is you need to understand it, right? You need to understand the concepts. You need to understand why and where you're drawing these levels. And then once you understand how to do it and why, then you go practice. And then yes, you can ask people. Some of our traders, some of our support members, they're all. I've taught them personally how to read these levels, so every one of them should be able to look at something that you've got and say, yes, that looks good, or no, right? I can tell you that on my particular channel, I have videos that I've made on support and resistance. So they're pinned on my channel, and you can go watch them. And you know, yeah, and that to me is the best resource. And once you, that's more to help you understand how to do it, right? So once you understand, you're confident on how to do it and why, then you can go practice it. And as you practice it and you start drawing out levels, reach out to a couple of support members, uh, anyone, right? Arrow, Cal, Low Man, just people that are online right now. VCAV, Professor, Arctic Engineer, all of them. I've trained every single one of them how to read these levels, so they should be able to help you. Yeah, I mean, you draw it out and learn it. Um, Build confidence in what you're looking at. Right now, like I'm just going to assume for a second that you're new, you don't know how to do any of this, right? Let's just assume that is the case. You look at a chart right now and you're going to say, I have no idea. I don't know where to get in. I don't know where to get out. I don't know what this chart even means, right? Build confidence to where you can look at it and say, okay, this is support, this is resistance, this is the trend. I know where to get in and out of this. I can just look at the chart without even drawing it. Like I can look at a chart and tell you this is a 50% retracement without even drawing it out, or be within 5% of a 50% retracement and say, I don't even have to draw it out, right? So majority of the Fibonacci 50% retracements that I drew, they were relatively within that 50% level, right? So it's just a matter of practicing it and doing it over and over. And then once you get confident in yourself, that's when you can start trading. In my opinion, you should build confidence. Yes, you're welcome. Go for it. It's going to be the option price. Um, Ask the question again. Um, that's kind of hard to do. So when you're option buying, I always say you got to watch it like a hawk, right? And the reason for that is it's not easy to just be like, all right, I want the stock to exit at this contract or at this stock price because the contract price could be different. The implied volatility affects that. The bid ask spread affects that. So it's not one to one with the stock price. So in my opinion, when you're buying options, you should only ever, and again, in my opinion, be in and out of position as quickly as possible. Never ever hold it. Um, and you watch the stock itself, and when it hits a certain number on the stock price, then you go into the option and say, all right, now I'm going to take my loss. And again, it could be 50% at that point, right? But the reason I use support levels is because if it breaches that level with strength, you can say bye bye to your contract. You're welcome. What's the ticker? So uptrend, higher highs, higher lows. But this last point, um, I'm going to draw a support level right here. These two squares. Let's see. This this could be potentially creating a head and shoulders, which is bearish. So you've got you got higher highs, right? These circles are all represent higher highs except for the last one, and you've got higher lows except for the last one. And who, who's that? Can you please mute your mic if you're not talking directly, whoever that is? Um, so do you see what I'm drawing out here? I mean, it's starting to, again, this is what I call a crest, right? It's starting to get to the top and then it's starting to crest like a wave. Like a wave builds and builds and builds, and then it starts to crest with the white, right? This is what I would say it's potentially cresting here. So might see this go downward. And if it breaks through this trend line, another indicator of a bear, right? Let's see, okay. And yeah, I'd say this 62 area is really strong support. I don't think it's gonna. It might consolidate and go sideways. I don't think it's gonna. Um, just looking at the history, I mean, it's stayed above the current level that it's at. I mean, I've already, as you can see, somebody else has asked me this before in the past, and I've drawn a resistance or support level here, and there's a lot of support, right? I mean, you look at it like this whole area is support, this whole area is support, and again here, and then this right here. I mean, that's a lot of support. So um, it might go sideways, and something might give it some strength to pump it. I don't see it going below that, but that's not to say it won't. Uh, Give it. Are you looking to get in that? Or are you in that? Oh, okay. Hmm. What's your expiration? Oh, okay. You got some time. And you said your strike is 85. Um, Wait and see what it does. I mean, I think you're still in good shape for now. I mean, did you buy it at a low? Are you in profit? Hmm. Hmm. I don't know. I don't know what to say. It could go either way. Well, look on my screen at the volume at the bottom and compare the compare this one and these, right? Look at the volume difference, right? So it's losing volume. And because it's losing volume at this level, that tells me that it's probably not going to drop. Right? So at some point, you're going to see, when you see these spikes of volume go above like 9, 10 million in green, that's going to be great for your position. But I think the bleeding and red volume spikes are are not really going to, they come after the green, right? So that's kind of like, if you look at it again, you got the green, then you got the red. You got the green, then you got the red, right? And then you got some more green and a little bit of red, and then you got a lot of green and then red. Right now it's consolidating. There's not too much going on in either direction. That tells me that the chances or probability of seeing green is higher than red. You're welcome. Okay, William, I see your question. I unmuted you. So if you did want to talk, you can now. Tess, you're welcome. I just muted you because there was a lot of background noise happening. Um, let's see, Tesla. So Tesla, um, I don't know if you know, but Tesla, I mean, I'm sure everybody knows that Tesla is going to be part of the SPY. That is very commonly known now. What people may not know is the date. So December 21st is the day they actually go into the SPY, become part of the SPY. And prior to that, there's hedge funds and a bunch of big money that is invested in the SPY. And in order for them to continue to be invested in the SPY, anytime a new stock gets added to the SPY, they have to put money towards it. And that's why we're seeing a rise in the stock price, because these hedge funds are required to put money towards it. And I think, I personally think we're going to see it hit 700. Me too. I've got lots of shares. But I do believe it'll continue going up prior to that date. And it might even, I think by that date, it's going to have hit its high. and then it's going to have a nice 50% retracement. Something similar to what it did when it split. All right, so I think it's going to go. Who's that? Anybody know who that is making all that noise? Um, I think we're going to see something similar to this. Okay. Um, so I'm not sure if that answers your question, William. Was that kind of what you were looking for, or was there something more specific? Okay, yeah. I mean, I personally think it's going to keep going. Um, right now, we're seeing some consolidation, some profit taken, but it's not strong enough to beat the buyers. If you see it breach 607, so here's the thing that I've been recognizing with Tesla since it breached 460. Every day or every other day, it breaches its previous high. Right? This is the first 2 days that it has not. And the reason being is because there's a lot of profit takers at the 600 level. Right? Me being one of them. I've had about in total out of across four of my accounts, I've had about 75 shares of Tesla. I'm down to half. So I've been taking profits as it's been going up. And I was one of those people that took profits 600 bucks. I think that's a wall, but it's breached that wall. It went above it. So I believe that it's going to continue to go past it. So 650 is the next level, then 700. If you look at the contract open interest, so I just look at December 18th since um, that's so you see here you got the open interest on 600, it's 22,000, right? And then you go to 650, it's the next highest, 97, right? And then 700 again, 92. Everything else in between is 1,000, 2,000, 3,000. Um, and then the next even level up is 800. I don't think that's going to happen. That's 9,000. But I think the reason why that number is so high is because the price is 325. I mean, the average person that's still fairly expensive. I mean, if I look at that, I think it's a little bit pricey. Now, if we look at shorter term, so let's say December 11th, again, we'll look at the open interest here. So 600 is 54, and then it's just kind of low until you get to 650. 3,000, it's higher than everything else, and you get to 700, 11,000. All right, so hopefully that gives you a good idea of. You're welcome. Okay, who's next? Oh, somebody asked about AMD. Um, I'll do AMD real quick. I already did AMD. I think so. AMD has this trend line here, RD 1999. It's got this trend line that it's been bouncing off of. So it goes up, falls, bounces, up, bounces, up, bounces, up, bounces, up. And I think we're going to see it. It might bounce somewhere above it, but I think we'll see it keep going up. AMD is going to probably get um, negative stock movement when the whole entire tech market gets negative stock movement. I think AMD is just going to keep going up until that time happens. Um, what is it again? QEP? Is that right? QEP Resources? Hmm. I don't like penny stocks. That was a penny stock. I mean, technically anything under $10 is penny stock, but anything under $1 is really a penny stock. This one, are you in that position? Because if you aren't, I would not touch it with a 10-foot pole. Are you in profit? I would take profit. I mean, this thing looks like it's been under a dollar at least 50% of the time. It's been over a dollar. One thing I can say is it is doing a 50% retracement. I can almost guarantee it. Yep. Look at that. Right on the friggin' money. Let's see. And that's what I mean by whoever it was last time that I was talking about knowing things off the top of my head. Look at this. 50% literally bouncing off of it. So it's in an uptrend for sure. It's just a matter of when does it stop. So you're in shares, obviously, right? Or so what's your break even price? Oh, get out of that. You're in really late. I thought you were gonna say something like, $1.10 or something. No, this is nah. Yeah, I would get out of that. I mean, there's not a lot of room for profit, honestly. I mean, had you got in at 85 cents or something, then I'd say, okay, set a trailing stop loss and you can just let the stock price keep going. But there's no room for you to set a trailing stop loss on this. Unless you've got what, $10,000 in it and you're up 10 cents? How much money you got in it? Okay, so you should have a decent profit off of that though. Like a 10% return maybe. Take the profit. You're welcome. I did, but it's fine. I can go over it again. What did you want to know specifically, or anything in specific? So I'm not sure how viable that is. What I can say is this is GRS. Can you please mute your mic? Okay, it's not GRS. Somebody else is making noise. Okay, it's gone. All right. So it's back. Anybody know who that is? Zax K. Please mute your mic. I will. I will give him a chance. All right, good. I like to give everybody the chance to mute themselves because if I do it, then they can't talk. All right, so Apple. So I think Apple is in an uptrend, and I will reference this with Tesla because it looks eerily identical to Tesla. So let me pull up Tesla real quick so I can show you exactly what I'm talking about. And there's this pattern that it's forming, and with Apple, it's longer term. Tesla, it was a lot shorter. So as everybody knows. All right, so you see this resistance line, and who was the person that asked the question? D sampling. Okay, so you see this resistance line for Tesla, and you see this trend line that's going up. Okay. Now what this is doing is it hits a low, hits a high, hits a lower high. I'm sorry, a higher low, goes up, hits that resistance point, comes back down, but continues a higher low, goes up, falls again, continues a higher low, and then it breaks through, right? All right, now I'm going to show you Apple. Look at what it's doing. Resistance points. Here's the lows. They're higher. This one's higher. And this one's higher. So at some point here in the next week or so, we're going to see this thing most likely retest that 138 high. In my opinion, it could be a little bit later. I don't. Does anybody know when Apple releases their um what do you call it? How many iPhone 12s they've sold? Does anybody know that? That would be a date that I would say to pay attention to Apple. Ooh. Right. Yeah, no, that's a good analysis. You've definitely got information that helps you make a good decision. I think you chose a strike or an expiration a little too soon. I would have went for January. Um, but let's just assume for a second that it's got another week and then it'll pop. So the thing that you got to think about when you get into a position is what was your time frame on when this is supposed to happen? When this n- okay. Okay. Um, um, personally, man, look at that open interest. Holy smokes. Um, I think that how much did you spend on this? Oh, well, that at 50 times six or 50 total. Oh, okay. Are, are you in profit? Okay. Um, I think we'll continue to see Apple consolidate and um, go sideways. So consolidation basically means what it's been doing here for the past month. Um, uh, sorry, I'm some more background noise throwing me off. Uh, who is that? Does anybody know who that is? This driving, making noises. If you could please mute your mic. 956 Wolf. There we go. Thank you. Um, I see Apple to continue consolidating to this small little area. So at that point, I would say they're going to release some news at some time about their iPhone sales. It's just a matter of when that date is. There's nothing that's a catalyst for them right now, right? So what's going to make Apple rip other than that? Nothing. So that's why I was saying you probably should have went out into January. And I know that $50 is your number. You could have probably gotten something like, let's see, 38, like a 150 or a 155 strike. It's 56, 55 to $70. That would have been what I did. I probably went for the 150. If $50 was my number, okay. Um, it's a little bit higher than your $50 number, but look at the open interest. It's the highest open interest out of everything in January. Yeah, 150 strike is, and the reason I say go that far out to January is because you give yourself plenty of time for that news to come out. And the moment it comes out, that position is going to double easily. As long as the numbers match what uh what they're anticipating. So, okay, hold the question real quick. I was just going to add to that. Your analysis on that, on the things that you looked into, they're solid. It's just that the time that you gave yourself, I think, was a little too short. Yeah, no, that's good. Yeah, if you have that kind of information as far as like the telecommunication data, as far as the work that you're in, you can use that, right? It's not insider trading. It's just simply this is what I'm seeing at work. It's not something someone told me necessarily. Apple didn't say, hey, we're this is what we're expecting. You're just going off of what you see. That's public info. If you can find that data publicly somewhere, you can use that data. Right, right. Right, right. Yeah, I can agree with that. Um, kind of. So the key thing that you want to look at is when do you think that this news is going to hit the market, and you want to be at least. So let's just say, for example, I'm going to use number of days, not actual dates. So let's say in 15 days you expect this news to come out. You need to give yourself at least 30 days because you don't want to have 50% days left of expiration because your theta decay has already eroded that contract. So you want to get it to where you've got 80% left of expiration on that. 75 to 80%. You can still, like, if you're down a little bit when the stock price is going sideways and you're waiting for some kind of announcement that is going to be good or you have really good feeling about, rather, You want to give yourself that additional time so that theta decay doesn't erode the value of your contract, so that when it is time for it to do its rip, instead of it ripping and you're already at 50% theta decay and it rips, you might just go back to break even or make $10 or something small, 5% return. But if you gave yourself additional time and it's only decayed 20% of that time, now you're going to see a lot more profit because that theta decay hasn't eroded your contract as much. Yep, you're welcome. Yes, yes, yes. Um, the strike price, that's a different, um, it's a different explanation. What I would suggest is I'm going to record this session, or I am recording this session. I'm going to upload it. There's a point in the video where I specifically discussed um, how to choose a strike price, and I think it's very detailed. So I recommend when I do post this for everybody to see, go back and listen to that. It's very detailed. I went over it with someone, and the reason why I don't want to go over it again is because I might leave something out. So I think it's best to rewatch that particular time frame, and I don't remember. It was more towards the start, so I'd say no more than an hour deep, but I think it'd be really good for you to watch. As far as the Apple play, it's not necessary. I mean, everything's an investment when you're doing this, right? None of this is for um, short-term money and then go spend it on a phone or something. Or it shouldn't be, at least. Um, when you do options, unless you're scalping, as in day trading, you should be really thinking about how much time you need to give yourself based on why you're getting into a position. Let's say you get into a position and it's at support and that's all you've got, right? It's at a support level and you think it's a strong support level. You have no idea how much time it's going to take for that to jump back up to the price that you want to get out at. You want to give yourself additional time, 2 months out, 3 months out. That way it's almost guaranteed for you to see profit. But if you give yourself a week or 2 weeks or even a month and it just goes sideways, you're going to lose money or you'll break even at best in some scenarios. But the further out you go, the more chance you have of seeing profits. Now, granted, the further out you go, you're not going to see as much profit as if, like, let's say, for example, you do a 3 month contract and a 1 month or a 1 week contract, and tomorrow it rips. Well, that 1 week contract's really going to pay, and that 3 month contract, it's not going to pay too much, right? Yes. Uh, yes and no. There are reasons why you buy shares over that leap type thing. I don't like leaps because I rather do shares. I can average down on my shares and not lose money necessarily like an option contract. So personally, me, I don't do leaps. But there are times that leaps are great to do and it depends on the type of strategy. And I don't want to go too deep into the type of strategy, but option selling, there's things called calendars where you buy a leap and then you sell contracts against it, right? That's the only time that I personally would jump into a leap. Yeah, I do too. I think Apple, they're going to continue to innovate. They're going to continue to grow in market share, um, unless somebody comes out and starts um, competing very heavily against them, kind of like Intel. Intel used to be top of the line. Nobody could compete. AMD was always trailing. And now AMD's come out with the Ryzen chips where it's taken over Intel. And so now we're seeing it seesaw into AMD's arena. And now Intel's the trailer. So until that happens with Apple, um, I don't see it being knocked off the top. You're welcome. That's Thinkorswim. Now, are you just using Robinhood only? So, do you have any experience with TD Ameritrade, and how long is your experience doing stocks in general? Okay, so you're kind of in the middle area where I would say for new people that haven't really done stocks too much, and this is kind of really their first rodeo, um, when you go from Robinhood to something else, it should be Webull because Webull is not as complex as TD Ameritrade or Thinkorswim rather. It's a little bit easier to learn, and they even give you free stocks, right? I have a link that you get free stocks off of, but that's not what I'm trying to do here exactly. What I'm for your scenario, it sounds like you do have some experience, and that learning Thinkorswim would be not as hard for you as it would be for someone that just coming straight from Robinhood with no real experience. Um, so Thinkorswim for you is probably an okay thing to do, but somebody that doesn't have as much experience coming from Robinhood, and like so, for example, if you all you've ever done is trade on Robinhood and all you see are chart or not chart, there are no charting. There is no charting in Robinhood. There is no option chains. There's a lot of things in there that you're just not offered that you're offered in a regular platform like Webull, Thinkorswim, Street Smart Edge, Fidelity, E-Trade, all these things. Um, there's a huge learning curve from Robinhood to Thinkorswim. There's less of a learning curve from Robinhood to Webull. So in your scenario, I'd say you're probably in a position where it would be a little bit easier to understand Thinkorswim. But for others listening, I would say you should look into doing Webull. And if you're on Robinhood and you're asking, well, why should I go to Webull, or why should I just do something else totally? Um, I've got a video on my channel that specifically talks about why I think Robinhood is complete trash. I recommend you guys watch that. Um, and again, I don't recommend people to go to Webull because I want free stock and I want to give you free stock. That's just a bonus. What I really want is people to get off Robinhood. I don't care where you go, get off Robinhood. And as far as Thinkorswim goes, um, I personally think it's for more advanced traders. But if you're willing to put in the time and effort and determination to learn it, it's the best platform out there. You're welcome. It's in my on my videos. So on the description in the videos, it's in there. But you can only get that through Rebull. If you do Thinkorswim, there is no such thing. Yeah, I mean, I don't disagree with that. I mean, here's the thing is, as a new trader, you don't want to be doing so. Webull, you get free option contract pricing, whereas Thinkorswim, it's 65 cents per contract. So there is that. It's not a lot, but it adds up. So, like for me, I do spreads. Well, honestly, I can't do spreads in Webull anyways, but if I had the option to do spreads in Webull, I could save $1.30 in and $1.30 out. But right now, it costs me $2.60 to do a spread in and out. So that's and for me, it's like I try to take profits that are 15% on a spread, and if I get paid on a position $50, well, just think about this for a second. $50 times 15%, that's $7.50 minus 260. Now my profit's $4.90. All right, so that's really not a lot for me. That kind of hurts. Um, but that's the type of trading that I do, where if I get into a position and it's a $50 collateral, I'm looking at best $20 to $25 premium on it, which is what they're going to pay me. And then, again, 20 to 20, let's just say $25, 15% of that, that's $3.75 minus 260. I'm looking at $1.15 in profit. That's worthless. So it really depends on what you're trying to do. But grand scheme of things, if you're doing a decent amount of contracts, you're trading a decent amount, you can save some money on Webull until you become a really, really good trader and you can do lots of options and you're learning other types of strategies where you can't do them in Webull, such as credit spreads. I'm not even sure if you can do iron condors or iron butterflies. I'm pretty sure you can't. If you can't do spreads, you can't do those because those are a multitude of spreads. But if you get to the point where you're that good and you know how to do those things, you want to start doing those types of strategies where you're doing, let's say you're doing 100 contracts a month. I mean, consider how much that is. 100 contracts times, you know, let's just say 60 or $1.30 if you're just doing straight option buying. That's $130 a month that you're paying. So Webull saves you that. There are benefits to Webull over Thinkorswim. Really, it's just that one benefit minus um, the ease of learning Webull versus Thinkorswim. I think again, Webull's less complex, less complicated, easier to learn in the short term, but long term, Thinkorswim is hands down the better platform. So I think it's a great transition platform. It's go from Robinhood to Webull. You learn some stuff. You get confident in what you're looking at and how to do things, like option chains. And then once you do that, once you're good in it, then you can transition to Thinkorswim because you're going to be paying money once you get to Thinkorswim as far as option contracts. You're welcome. Are you specifically referencing options trading that you're doing, or just shares? Options? Do you have any experience with option chains? Okay, so that would be the number one place to start is learn the option chain. If you're going to trade options, know how to read the chain, which is what's on my screen right now. If you don't know that, then you should not be touching options. I mean, it's hard to say. So there's tabs at the top: the monitor tab, the trade tab, the analyze tab, the charts tab. Those are going to be the main four that you're going to be using. When you go to the monitor tab, there's in monitor, there's account statement, right? Account statement shows you, interest, and well, I only have interest on a margin account. Um, there's also dividends that I get paid because I do shares on this. But then you can look at order history, trade history. Um, it's not showing because it kind of crashed. So um, it shows you equities and then your count summary, right? And this can get confusing. If you have, I think it's, $2,000 or 2,500. If you have that much in there, TD Ameritrade will actually set up a live session with you and walk you through some things, specific things that may or may not help you. It's kind of like a crash course on the platform, basically. But there's a minimum amount required in your account before they'll even spend time with you. Um, but as far as something that you need to know specifically, I can only tell you the specific tabs that you're probably going to be going through majority of the time. But you're a unique person and you're going to have your own things that you do that aren't going to be what I do. So things that I think are important may not be for you. So that's kind of the area here that I'm like, I can, if you have specific questions on how to do something specifically, I can help you a lot easier versus a generalized, what should I look at? You're welcome. Say that again. Selling calls. If the price goes down, that's good for it. You're shorting it. Well, you want theta to burn because that's where your value comes in the contract. So option selling, you need theta. Option buying, you want to get out before theta affects you. So it's opposite, right? So if I'm option selling, I got paid. So here's an example. Matter of fact, let me get out of this platform and come back in because it's um, hold on a second. All right. Okay, here we go. You guys got to read. Okay, all right. So option selling. We're looking at Apple. So if I were to sell a call right now, I get paid $465. Okay. Now I want the price to drop. And when I enter a position with options selling, um, when you initially start, theta is at 100%, meaning it hasn't decayed yet. So you need theta decay as much as possible. And frankly, if you can let the contract completely expire down to 0 days, and you're out of the money, you'll keep that $465. But if you, let's say, for example, you've got 20 days till expiration, and it expire or the theta decays 10 days out of that, you're probably and the stock is out of the money, which means that's what you want. So in this position, if I sold a call, I want the stock price to fall. All right, so as long as I'm out of the money, theta is decayed for 10 days, I'll probably see about maybe $200 in profit. Does that make sense? Option selling is very complex, so that's a different beast. So you want to get out of that position before it expires if it's in the money. Right? So let's say you're the day before, it's at 125. Theta has already decayed. So let's say right now this current position is $125 strike. And the stock price is say at 125 bucks or even $126. It's you can still take profits because your premium that you were paid is $465. So with option selling in either direction, 125 plus $4.65. That puts your break even price at 129.65, right? Because it adds premium to that 125 number. You understand? So if it's at 127, I should still see profit. If it's at 128, I should still see profit. The moment it goes to 129, because you still got that last day of theta decay, the moment it goes to 129 or higher, I'll probably start breaking even or start seeing losses. So now it sounds like you're talking about selling a call with 100 shares of and own 100 shares at the same time. Okay, so if you're owning 100 shares and then you sell a call against it, that's called a covered call. So in this scenario, if it goes against you and you don't want the shares, you don't mind if they're gone, just let it expire. It's fine. You keep the full premium. You keep that full 465 bucks. But if you want to keep the shares, then you need to get out of the contract with profit if possible. That's generally the goal, right? Um, so that's the question you got to ask yourself is, do you mind if the shares get taken? Because if you're in the money, they will take your shares, but you'll keep the full profit. So you got 100 shares, you get paid $465 to sell a call against those shares, and it expires in the money. They're going to take your shares. You keep the full 465 bucks. Well, if the stock price drops, of course your shares are going to get affected by that value. It's going to benefit you on the option side, but it's not going to benefit you on the share side. I'm not sure what you mean it doesn't affect. So it's very simple. You sell a call, the stock price drops, it benefits your option, does not benefit your shares. If you sell a call, the stock price goes up, it finishes in the money, it takes your shares, you keep your premium. So it's a double-edged sword both ways. You're welcome. Okay. Who else has questions? DocuSign? Okay. All right. 1 second. I'm just seeing something here I want to go ahead and draw out. All right. 5 day, 5 minute. Okay, that's the only one I've got actually. But all right. Well, that's after hours, so it's only shares being traded. You can't. That's the problem with options is sometimes these things happen after hours and you can't act on it. And frankly, if you had bought at 2:30, the strangle at 2:30, you could have made money on both ends, very much money. Yeah, if you could have, yeah, then you could have made a lot of money. But because it's an option, you're limited to during market hours only. Right? I think only ETFs, honestly, you can trade 15 minutes after market close. But particular tickers, it doesn't allow you to. So you're in the position just to watch what happens, and you can't do anything about it. What I can tell you is it's breached highs. It's went over its most recent highs. Let's see. 90. Ooh, never mind. No, I'm wrong. It's in an uptrend. It's in an uptrend. Um, Hold on. I don't know. It did really well in earnings. 23 after earnings potentially. Yeah, after earnings potentially. Yeah. So I mean, are you in profit with that call? Uh, what's that about? Who was that? Who said that? Richard, chill. I'll take care of it. Don't do that. Don't engage in people that are disrespectful and rude. Does anybody know who said that? Is it you, Hash? All right. No, I'm gonna deal with that later. Um, so all right. So Richard, uh, with that, I would say, you're this is the stock's in an uptrend, right? I mean, if you look at it, um, from the low, it's got an uptrend, right? With the most recent, honestly, with the last, I mean, this is really the only one you can really use, right? It did its high and then it fell. Um, it's hard to say. It's in an uptrend. I don't know. That's a tough one because it did well on earnings. It's in an uptrend. It breached some highs, although it's hitting resistance here, right? So if you see, let's just go here to the 90. It's definitely hitting resistance. Right? You got these 2 points here, pretty strong resistance levels, and then it bounced up that high and then fell. But I think you're going to see the call side go up. What's your expiration date? Oh, December 18th. Okay. Let me just see if I can see what his channel said. When did he alert that? Do you know? Was it? Oh, where did? Um, I'm not seeing that. Is that on his channel or was it on like a lottery trade or? Ah, yeah. Anytime he alerts a lotto trade, you want to get out when he does. Well, I'll tell you like this. Um, I personally think it's potentially going to have problems going past that resistance level. So if you see that call start printing tomorrow morning, get out of it and then wait for it to come back down. Uh, what are your strikes? Whoa, okay. Okay, so this is more of banking on puts than calls because your puts are closer to at the money than the calls. Um, how much did the call cost? Okay, okay. So you said 190 on the 18th. 18th, stated the case $17. So I mean, I'd say you should within. I don't want you to hold over the weekend. I think you're going to see some red here though, potentially because. So I would say get out of that call. If you're in profit at all, get out and take that profit. Because if you look at the volume down here, it's all green, and then this last one is really small green. All right, can you see that on my screen? It's probably Yeah, it's probably hard to see, but there's this one last volume candle down here at the bottom, and it's like 340,000. The rest of the day, it was 1 million, one and a half, 1.7, and then 3.2. And then it fell all the way down to 347,000. So that means volume has fallen off very heavily. I think you're going to see potentially some red on this one. So I would get out of the call side sooner rather than later, and honestly, get out tomorrow on those puts too. I think you're going to get a chance, in my opinion. I mean, this thing ripped up. I mean, if you look at the last time it did earnings, um, let's see, that was that day. So actually, it did a run up to earnings and then fell a day before earnings on this one. But for today, it went up because of earnings. So I don't know, man. It could go either way. I hate to say it. I don't know what to tell you, unfortunately. You're just gonna have to play. I mean, that's the thing about strangles. You have to be quick. You can't you can't take your time on either side because I mean the longer you hold it, the more chance you're gonna lose on both, right? So the purpose of a straddle or a strangle is you get in, and then when you get in, you take profit whenever one of the sides are paying, and then as soon as it's done doing its move for the day, as far as up or down, it's gonna go back the other direction. Always does, right? Majority of the time. And when it does, then you take your profits on the other side, right? You want to be in and out of those types of plays same day if possible. Yes, same day. When you're doing strangles or straddles, you want to be in and out same day. Right. Again, this type of play, you've got to be in and out quick. You can't mess around, not on straddles or strangles. I mean, because you're potentially gonna lose $300-400 if you don't get in and out of that position. You want to take the object here is you pick a side that you're biased towards, and then you pick the other side just in case that biased side does not go in your favor to kind of protect some of that downside loss, right? So in this scenario, it sounds like you're biased towards the puts, and the call is your hedge, right? So when you see profit on the downside or on the puts, that's you definitely want to take it. And then the moment it starts going back up a little bit towards the hedge side, you take it too. You take it off the table as soon as you can because it's not meant to make money, it's meant to protect you from loss. Right? That's the purpose of a straddle or strangle. Protect yourself from losses. So you can make big on one side and then when it moves back the other direction, you take it off, you take that hedge side off the table so that you don't lose it also, right? Does that make sense? Well, I mean, the object's not to lose, right? The object's to make money. So again, you've got tomorrow, right? When you see profits on either side, you take them. Don't mess around until you see profits on the puts because it's volatile. So, well, theta is a time. Implied volatility. They are actually not open interest necessarily. I mean, open interest is kind of a general thing, right? You just got to have it. That's the main thing. As long as you've got open interest, then it's good. Your bid ask spread and your implied volatility, those are going to make a difference in how much that contract's worth. So if you get a really close bid ask spread, then the value of that contract is going to be a good fair price. It's going to be in your favor. If that bid ask spread is wide, then it's not going to be in your favor because there's going to be either more sellers or more buyers. So that inflates one side and deflates the other, if that makes sense. And implied volatility, if it goes up or down based off of whatever the stock does, then that's going to benefit or not benefit you, right? So there's a few things that go into it. Hope that makes sense. Okay. Um, hmm, you could probably do JNPR, MO, Pets, EXC. Those are going to be some few that I know off the top of my head. Maybe no, not Walgreens. Um, those off the top of my head. would be something I would say. Um, Not Bank of America. That one's ass. Yeah, those few that I mentioned is probably going to be your best bet as far as what I know off the top of my head. I mean, if you look at JMPR the last 180 days, I mean, you see what it. I mean, it's within from 19 to 26. So same thing with pets. Pets is actually. I mean, you see what it's doing here. The past month has been ranging from 20, 29 to 30 a handful of times. You could probably have gotten in and out of this one 4 or 5 times with profits each time with what you're talking about. EXC, Exelon. Let's see, right here. This one's range is anywhere from 29 to 46. I've actually been trading this one for 10 years, so I know this one pretty well. Under 35 is a good price. 30 is a great price. Above 42 is a good sell price. 46 is a great sell price. That one always trades in that range. Let's see. Let's look at the history, actually. 5 years. You're welcome. Yes, I mean, Exelon, what, 2016, 2017, it ranged from 30 to 36, 20, I'm sorry, that was 2015. 2016, it ranged from 34 to 41, and then 2017 went from 36 to 47. See, 2019 was its high, and then this year you see it for majority of the year it's traded between 34 and 39. So I mean this one's a great one. If you see it at 29, I go heavy. I have gone heavy rather, but I haven't seen it at 29 in a while. So it did in COVID, but I had money and other stuff, so I couldn't get into this one. You see this thing at 29, 30, 31, 32, you could go in heavy, and you'll guaranteed see it hit 36. Easy. No, don't double dip. Sure. I've heard some people ask about it. Um, I don't like indicators personally. They're an after the fact movement. So the stock moves, then the indicator makes its move. You're too late at that point. But I mean, if you found a way to make it work for you, then great. Um, I mean, like the MACD, for example. Let's see. I'll add it just to give an example of what I'm talking about. This is kind of one way that I've used the MACD before. I don't particularly like it. Let me find an example, if there's an example. Something like this. You see what it's doing here? So it's really wide, and then it starts to kind of come back together before it even crosses over. Um, Honestly, before it starts going back, if you can get it at the widest part on the MACD, like down here, it's like really wide on these two little points. That's where you want to get it. That's where you want to buy the stock. Because I mean, if you look at it right here, if you see how wide it is, and then look at the stock price, it's low. And then down here, over here, where it's really wide, and you look at the stock price, it's pretty low, right? And same thing way over here. I mean, this is a 5-year chart, but you get the idea. Really wide right here, and the price is low. So let's go to a 180 and see if I can. me start back at the top. I will say this, Apple, it's about to cross itself, and I was saying that this is going to continue to consolidate. It's going to fall and go up, fall and go up. And right now it's at that resistance point, and this MACD is basically confirming what I'm seeing and what I said before about Apple. It's going to fall, but it's not going to be a big fall. It's just going to do its little crossover, and it's probably going to look something like this right here. It crosses over, kind of does this, goes down a little bit, and then comes back up. It's not going to have anything crazy like over here. It's kind of going to do something similar to this, in my opinion. But this is a maybe something like this one right here. It's like a more of a good looking crossover versus this one's kind of ugly, right? This one's more crested. Um, so that's a good way to use it. Let me see if I can find that wide thing that I was talking about. So, and you can use it on both ends, right? So look, if you look here with Adobe, is this Adobe? Yeah. So you look how wide it is right here, and then look what happens to it. Look what happens to the stock. It falls. So I mean, you can use this for some type of certain scenarios like that. I mean, again, really wide right here, stock price is really low. So if you're able to find a stock that's really low and then you look at the MACD and say, all right, it's really wide, like um, just consider everything at my little pencil to the left, right? And you look at how wide it is, and you're like, oh, okay, it's really far away from that um, I'm not sure which one. They're both moving averages. I'm not sure which one's which, but um, the teal is far away from the tan. And when you see something like that, that's a good indicator. You're I can use this in the sense that I can almost predict that if the stock price is low, it's at support, and that thing's wide, that's probably a good entry. You get what I'm saying? So I wouldn't say to use it strictly by itself, but if you can find a way to use some of these indicators to confirm what you're seeing, that's probably a good way. I would say to use it like that. And if you can use an indicator like the MACD, for example, if you can use this to be able to determine what it's going to do before it does its move, then that's when I would say it's probably beneficial to you. So you see right here where the crossover is, right? It's already too late to get in, right? You've lost your best opportunity to get in, right? But you've got to wait for it to hit. You've got to wait for it to be really wide. Like again, like right here, it's super wide, and then it falls. And this isn't something like if you're buying shares, obviously you're only going to want to wait till it's down here. If I'm doing something like a put or a call credit spread where I'm bearish and I see this wideness going on, I would want to get into it. And as soon as it does its drop, I'm out. I'm not sticking around. You're welcome. So I do like indicators if you can use them to predict things that are going to happen, not let's wait for the indicator to make its move and then get into it. That's a mistake. Okay. Anybody else got questions? And Richard, I'm not sure if you were done asking your questions. So were you done? Okay, cool. All right. Who else has questions? Hey, uh, let's look. I don't know. I don't really see any gaps at all, to be honest with you. Um, I don't know. I mean, it's in an uptrend for sure. Um, one thing I would say is so this was its recent high. If it can stay where it's at or potentially push up further, then I would say it's going to continue up. But gapping, that's a different story. Yeah, I mean, not a bad idea, but I mean, it could go either way. I mean, Fridays are usually a wild card. I mean, there's times when Fridays are bloody, but then there's times where it's like, whoa, I didn't expect that, so nothing is consistent to the point where you can say, oh, Friday is going to do this. You know, I wish it were, man. I'd be rich. I tell people all the time. If I can predict something and be able to trade off of consistency as far as that goes, I'd be totally rich. I'd put all my entire portfolio into something. Yeah, it's going to catch you though at some point. It's going to catch you doing the wrong thing, and it's usually when you're heavy. It's just like Tesla, like somebody would somebody could be playing Tesla on its run up right now, and then say the last 2 days they might have went in heavy this time and took and incurred a really large loss. So, all right, was that it? Did you have any more questions? I don't know. Let's see. Let me see if I can get it. It is above the VWAP. Not much, but it is. What do you mean, like the actual VWAP price? Um, let's see. Looks like 366.90, 92. I wouldn't touch it until it touches one of these yellow or pink lines. Yeah, you don't want to touch that. You want to get it off of one of these extreme levels. But that's quick, fast scalping. So if you're using VWAP, and you want to do something that's not going to be like Tesla where it does huge swings. You want to do something that's going to be um, within a certain range, I guess. Like let's see, let's look what Tesla is doing with the VWAP. You see like how it breaks above it right here? It breaks above the the extreme level of VWAP. That's scary to get into. But again, you see here it actually it bounces quite a few times off that yellow point, and then it goes right above it. Boom! It hits the high of it. So easily trade off of VWAP. I think. I mean, it's been a while since I've used it. I would say that if you can kind of use it and watch it and see how it reacts. I mean, do the top and bottom lines move, or are they fairly consistent? And can you trade using that consistency, if that makes sense? Yeah, I agree. It's definitely one of the better ones. This one's similar to like regression channels. Um, Regression channels though is instead of the VWAP line in the middle, you've just got the two outside. So sure, regression channels are just drawings. So it kind of takes you a second here to get it right, but that's generally what you're looking to do here is, and then I'll zoom in to the, and then you can see here how it, if you can get the high and low, then you can basically trade off the regression channels. It actually does have a middle line, but it's not a, it's a standard deviation line. It's not like the VWAP. You know what I mean? And these are just two outlier areas, probably like one deviation away, maybe. Oh no, that's as far as day trading, it's a 3.82 deviation. So um, that's what that's at least what it says, 3.82. But this is how you use regression channels. It's very similar to the VWAP. So anytime you see something drop below that regression channel, um, so normally I guess let me redraw this. What I would probably try to do is say, all right, um, oh, it's kind of a pain in the ass to draw because I'm okay. I get it now. Sorry. So you would do it like this in the direction that it's going. You see how it it it's hard to do off of the whole entire day. It's easier to do in waves, if that makes sense. So like this right here is an uptrend, and then you can do something like this, right? So these are a little bit more complicated because I think these you got to use them specifically with uh, other things. But if I go further out, I think I could probably get a different reading on it. Let's try that. Yeah, see if I do the 5 day 15 minute and then now let's go to the 1 day 1 minute. Yeah, see there we go. That's how you use it. That's the best way to use it in my opinion. So you go kind of further out from the time frame that you're looking to trade. So like say if I'm interested in trading the 5 day 15 minute, maybe I'll go to like a 10 day 30 and then draw it out for the day. Right. So as soon as the day starts, I'll draw it out. Or let's see if I can see if I go across multiple days, it may or may not work. As you can see, there's a huge gap in between the stock price and the regression channels. Um, but if I try to do something like low to a high, right? Again, it basically moves on this line, this center line. But the closer you get in time frame, so like I said, I think 5 day 15 minutes the best to draw stuff. So as far as regression channels go, you pick your day. So let's say it's established. So basically, you want it to establish a low and a high. So for example, it's done this, um, right? So I try to get the as low as possible. I try to go from left to right, and I try to get like whenever it's created some form of low or it hits a support level or a recent support level, and you can draw off of that upwards. If you now if you think the trend is going to be up, because again, um, it could be the scenario where you're only at this point in the time of the day, so you're actually going to be drawing it like that. All right, so in this scenario, if I go further into like the 5 day 15 minute, well, actually, it needs to be the 1 day 1 minute. If I go into here and let's say it's only done to make this easier. Let's say it's only created this much so far in the day, right? And I've drawn the regression channel. I'm like, oh, it's definitely at a low. I'm gonna get in. I mean, you could totally use that. It's just it's going to take some practice. If you want to use regression channels, it's going to take some practice. But I think that VWAP's easier, personally. But regression channels do work. You just got to there's some learning. There's a learning curve on how to draw it properly, when to use it, when to draw it, which time frames to draw it, and then which time frames to trade on. Nothing is like the VWAP. It's clear cut. You put it in and it just goes. This you've got to kind of go back and forth between time frames and price levels and stuff like that. So it's not as easy as a VWAP in my opinion, but it does work. Yes, and that uses standard deviation, which is those little lines on my chart right now, the green, purple, tan, gray. Those are standard deviation. That's just a much larger average, whereas the regression channels, it's a range between a low and a high of a certain time frame, not an average across multiple days. Well, I think regression channels are best when the stock's moving neutral. So when it, let me see if I can find something that's neutral. This might be. This might be a good one to do it on. Let's see. Something like that. So when it breaks below and you're like, holy shit, right? And it gets just super low. I mean, at some point, it's not, stuff never falls hard, and especially when it's in an uptrend. You go to a longer time frame, it's in an uptrend, right? So it's not like it's going to crash lower. It's breached highs. You just got to do, there's a lot more analysis required for regression channels. It's not as simple as VWAP. Um, yes, I'm more of a chart analysis, which is technically a technical analysis. I don't use technical indicators necessarily, very rarely, but I do chart analysis. Most of my stuff is a chart analysis, and I guess that could be considered technical analysis. I rarely use indicators. I mean, like I said, I like the MACD for certain things. I like the RSI for certain things. I like the standard deviation for certain things. I like the VWAP for certain things, but they don't all work on. They're not like a silver bullet or a broad paintbrush that you can use for everything. So they work for specifics. Okay. Who else has questions? I don't know anything about it. um, that would probably be a question for maybe Tilio. Oh, and if you guys haven't noticed, there is a Tilio question bot. So you can ask questions, and at the Tilio, it's called Tilio Question Bot. Let's see. Let me just make sure that's the right uh, name of it. It's Question Bot. Yeah, Question Bot. So just at the Question Bot, and it throws your questions into a channel. Because like a lot of times, a lot of us support members and analysts, admins, whatever, we get questions in the lobby or the trade floor, and like me, for example, I'll go in there, somebody ats me and asks a question, and I won't see it for 2 or 3 hours because I'm, doing something else or I'm at work or whatever the case. And I come back in and try and find it, and I have to sift through 600 messages to get to the one that I was mentioned on, and it was like, hours ago, and the chat's moved a lot. This thing will help to centralize questions so that they don't get overlooked. There you go. See that? That's awesome, isn't it? So, um, anybody that knows the answer to that will respond. And it's the job of all support members to look at that channel. Tilio also does. I do as well. MMA does. So, it's a collective responsibility for all of us here as staff. And if something, I think also, I'm not sure if Tilio has done this yet or not, but the plan is to make it so that when you do ask questions and it gets answered, it removes your question out of that channel. So then we know that it got answered, basically. If it if the question gets answered, yeah, once it gets answered, it should get removed. I think that's what's happening because I remember seeing a lot of questions in there and they're gone. So that tells me that it's working. So I'm just not sure how it works yet. We're going to have a staff meeting on Sunday to go over how to use this specifically so that people understand. I think there was saying something about right clicking and doing something. I still have questions myself on how it actually works and how to use it or how to respond to members. Um, but I've set up a meeting for our staff this Sunday to go over it, so we should be able to be efficient on those responses and stuff. Okay, cool. All right. Anybody else have any questions? Um, I think weed is all hype right now. If you're in profit, I would probably take it. Weed's not going to really do much until it gets decriminalized and turns recreational at a federal level. Like, like, yeah, like tobacco and alcohol. When it's legal, like tobacco and alcohol, um, I don't know. Maybe the ATF will turn into ATCF or ATFC or something because alcohol, tobacco, and firearms, right? I mean, alcohol, tobacco, firearms, and cannabis, ATFC. So um, until it becomes federal, legally federal, and recreational at that, I don't see it doing much. I mean, it's all going to be hype prior to that. You're welcome. Okay. Anybody else have any questions? So I will be posting this video on a YouTube link for everybody to rewatch. If there was something here that you found interesting or you came late, um, it'll be available maybe by the end of the night. We'll see. See how long it takes for because I've got to convert this video um, down. I got to downsize it and I have to run it through a converter. So last time I did it, it took about 45 minutes for 3 hours worth of video. 9 p.m. Unless somebody else has more. But yeah, I'll probably sign off here soon. I mean, I'm still happy to answer questions as they come. Um, but if there aren't any more questions, I'll probably end it. Yes. um, TradingView is okay. It's not bad. It's good for analysis, and I think you can use custom script making there as well. Um, I personally think TOS is the best. No, that one down on the bottom is MACD. But I personally don't really use I don't really use indicators. I was just showing somebody an example with this. No. SPY kind of creates a general trend direction, but beyond that, I mean, that's about as much weight as I would say it holds. So, can you please mute your mic? Yeah, yeah, that's more of a day trade scalping type of indicator. Well, they're different. They're used differently. And the EMA, I think, needs to have other EMAs or SMAs with it. The VWAP is just the VWAP. There's ways to use the EMA in conjunction with other things. So people use stochastics with it. Um, the VWAP's just itself specific, but um, the EMA, that's should be used in conjunction with something else. I think typically is used in conjunction with something else. Well, I didn't say that. I just don't. I don't personally like trading Chinese stocks. That's all, because they manipulate their stuff. Yeah, I just don't like Chinese stocks because the government of China, they're into the stocks. It's not privatized. It's government controlled. So, it's all manipulated by the government. Now, one could argue that it's very similar here in the US. But at least there's some form of um, what do you call it? Like the SEC, they hold companies to a certain standard, right? Um, there's a decent amount of clarity and what's the word I'm looking for? I'm short for words. They're held to a standard, whereas in China they just throw some shit out and it is what it is. Like they're going to manipulate it in their favor. NIO is the competition of Tesla in this scenario, especially in the market. Um, China wants to compete with the US, hands down, and that's their Tesla of China. So they're going to do their best to manipulate that against Tesla. That's their goal. I mean, their goal is to manipulate. Like if you think about it, they manipulate their currency to the U.S. dollar to benefit their own uh, economy, right? So they make it so that our exports cost a lot for us, and it requires us to do more importing because they lower the value of their currency. It makes the trade. No, no, I don't touch forex, but it makes trade imbalanced when they manipulate their currency, and if we don't follow suit, then it's unfair to us. But the problem is when we follow, it devalues our currency, right? So it just erodes the value of the dollar. You can't buy a loaf of bread for $1 anymore. It costs $3. Or you can't buy milk anymore for 50 cents. It costs $4. And that's what happens when you devalue currencies, is it erodes the value of the currency, and they're doing it to benefit their exports so that their economy can be propped up. When in reality, if they were to do it fairly, they would be doing poorly because of the the currency values. Right? They wouldn't be able to compete, and the only way they can compete is to cheat, and that's how they cheat, is to value their currency, and they cheat with other things, right? So that's why I don't like China, as far as the market goes, or I don't really like the Chinese government. Period. The people are fine. I got nothing wrong with them. I mean, I love Chinese food, I love the culture, but the government, right? They are shady as fuck, and they're going to manipulate everything they can in their favor. It's just that simple. We'll see what happens, I guess. Good luck. Okay. You could argue both. I mean, I would say to learn a trading style and figure out what's going to work for you, what you like to do, and then pick the stocks to do it with. There are definitely going to be stocks that work better for a certain strategy. Yes. I don't think so. The majority of the time, they trade things they always trade. I mean, there's going to be outliers, right? There's going to be ticker symbols that pop up that hit their radar. I mean, with anybody that happens. With me, it happens. But I mean, if you look on my screen here, let me just. So I've got this. I got a bunch of tickers here, right? But I don't. I would probably trade. So what I normally trade is going to be Tesla, Siemens, Rocket, Pets, uh, MO, JNPR, Exelon, and City, Apple. Those are going to be the main ones that I trade. Now, when I'm watching this and I see stuff, you're not always going to have these tickers in the position that you need them to be in. So when I'm not doing shares, I'll just sit on cash until I'm ready to find something that's working for me, that's doing what I need to do so that I can get in. Um, when I'm sitting on cash, so I have two different types of accounts. I've got Roth IRAs and I've got a margin account. If I'm not trading with my Roth IRA, then I'll start looking for things in here uh, to do call credit spreads or put credit spreads or something like that. And I don't normally, so out of all of these stocks here that I've got, I might trade one or two spreads, and I'll probably be in 5 to 10 tickers of shares. Most of my money is in my Roth account. I've got a very small portion in a margin account. So I've got like 6,000 in a margin and 60,000 in my Roths. Yeah, you can trade in there just like you can a regular account. It's no different. It's just the rules around um, the money going in and out of the account. There's no difference on how you trade it though. You can trade it. You can do options. You can do mutual funds. You can do shares. You can do any of that stuff. You can in a specific scenario. So a Roth is after tax dollars of contributions. You're allowed up to $6,000 in contribution. If I make $6,000 on that 6,000, I've got 12,000 total. I can withdraw $6,000 without penalty because that's what I contributed. The moment I start touching profits, that's when I get hit with retirement fees and taxes. Yep. Yeah. So basically, it sounds like you're saying you have $15,000. You've put in 6,000 2 years now. You can pull the 12,000 out, and as long as you don't touch that 3,000 of profit, you're fine. Well, margin accounts are specific to option selling, um, or if you're trying to really over leverage a position. If you're doing a lot of day trading, um, margin accounts are good. Um, the thing with margin is if you're in a position, let's say you buy shares and you're in that position for longer than 30 days, you're going to get hit with interest on that margin amount that you've borrowed. So that's why margin's not good. But if you're in a position utilizing margin cash, so I use margin because it's required for um, um, trading credit spreads, iron condors, and butterflies, right? Specifically, option selling. If I'm an option seller, I'm required to have a margin account. If I'm just buying options and using some of those strategies, then I don't need a margin account. I can do it in a cash account. It's just the difference is option selling and option buying. Yeah, I mean, you have to find something that works for you or that's interesting to you because when your interest is peaking, that means you're going to learn more. That means you're going to excel at what you're learning because you have interest in it. If you don't have interest in something, you're just like, well, I want to make money, but I'm not interested. Don't do it. It's a waste of time, right? Um, as far as new traders go, I recommend if you can't swing shares and be profitable, stay away from options. Because if you can't buy and sell shares and make money, you're going to fail at options. Yeah, to learn. And that's another way that you can learn the stock that you religiously watch. Watch it for a month or whatever, and you're like, all right, I know its highs, I know its lows, I know what it's going to do when it bounces up this price. Let's start with shares. Buy some shares at this price. Let's see what it does. And if you can make money doing that, and you can be quick about it, and you find a strategy that works for you as far as time frame and indicators or whatever the case it is, and you're successful and you can make money with shares, you've got a real chance at making money with options. But if you get into options and you can't even make money with just shares, you're going to lose money in options and you're going to lose it a lot faster than you did with shares. Most people start backwards. They start with options. Like I've probably converted people like that where they're in here and they're like, "Oh, I want to trade options." and I want to make money, this and that, and then I convert them from doing options to shares. And there's one particular guy that he's 100% successful with shares and 100% unsuccessful with options. And he's doing well with his shares. And he's like, I'm not even going to touch options anymore because I'm making money with shares. So there's certain things that, like, if something's working well for you, don't stop doing it. Keep doing it. If something's not working for you, stop doing it. You're going to just keep losing money. That would be a good idea. You never want to put all a certain amount of your money into one sector, because if that sector gets hit, like oil, for example, when oil got crushed earlier in the year, if you had money in that sector and you had half of your account in that sector, even if you've got 5% of your account in each ticker and you've got 50% of your money into that sector, you're going to get crushed. So if you can, I would say pick the best tickers in each sector. That's an ETF. That's not a sector. Well, the SPY is a different beast. I call it the universal beast because it's. I think it requires real skill to know how to trade the SPY. It also requires a lot of money, unless you're doing options. But then even with options, it's just it's a different beast. If you can trade stocks, if you can trade specific ticker symbols well, then maybe you've got a chance to trade the SPY well. It's similar concept of, if you can do shares well, then maybe you can do options. If you can do tickers well, then maybe you can do ETFs. They are generally, yep. Well, first off, what's your, when you do decide to start trading real money, how much money are you talking? So you're gonna have to approach it differently. So the way I started with 700 bucks. I'm up to 60,000. So when I started with 700 bucks, I went into one ticker. That was it, right? I just traded that, and I made like a 45% return on that. And it took about a month and a half, but I made 45% return. Then I took that $1,300 or $1,200, whatever it was, and I put it all into one other stock, right? And until I got to about 10,000, that's when I started splitting it up and doing 1,000 each, right? So you're going to have to approach it a little differently. And that's why I suggest you do shares, because if you make the wrong choice, you only lose when you decide you lose, right? It's not like options where you're screwed when that expiration date comes. If it's not at the break even price for you, you're screwed. So I think that's very important to understand. And again, with 1,000 bucks, I personally think it's better for you to invest it in just one stock and do shares. And then you build your money. You do it the safe way. You build your money. You get to 5 or 10 grand. And then at some point you can start saying, all right, well, I'm going to take 1,000 and I'll do options. And by that point, you'll have had some experience with these tickers that you've been trading religiously. And then you can start saying, all right, well, I'm going to put, you know, $1,000 or 500 bucks towards this one ticker that I know it always bounces off of this level in options, right? So you're creating a strategy for yourself. You're learning how to do that strategy, becoming confident, and then once you get that confidence level and experience, then you can then options is a lot less risky. Because if right now you don't know how to do support resistance, you don't know this, or if you don't know that, then you're just basically covering your eyes and throwing money at the screen, and that's dangerous. Is that a good thing? You're welcome. Okay. Yeah, I mean, I have this every Thursday and Sunday, so you're welcome. And again, utilize my channel. I've got just a few videos posted right now. I'm going to be making more. But if you guys have anything you want me to make in specific, um, you know, let me know, and I can try to make videos, specific videos to requests. Maybe I'll open up a channel for uh, video requests. So uh, I'll figure that out. Maybe by the weekend, I'll open up a channel for you guys to request videos for me to make. Okay, you can absolutely. And that's what I'm trying to do, right? I mean, like I said, I started with 700 bucks, and now I've got 60,000. So, well, I started that particular scenario 3 years ago. So, I mean, but this year, so it took me 3 years to get from 700 to 36,000. This year, I went from 36,000 to 60. No, not at all. I mean, unless you're doing $100 million worth, right? I mean, or you're doing a stock that's like a penny stock that's only doing 100,000 shares in a day, or 50,000. I mean, if you stick to very popular stocks, that are doing at least half a million a day minimum, you won't have a problem at all trying to sell positions. Yeah, I mean, like I said, if you trade the way I trade with just support and resistance and trend, it's very, very likely that you're going to be able to make money. I mean, like I said, I've converted a handful of people from options to shares, and they're all successful because they're trading the way that I suggested they trade. And I'm not saying that I'm the best thing since sliced bread, but my strategy is safe, and you decide when you lose, not the market, not some option contract expiration date. You decide. You're welcome. Um, I don't really mess with crypto. Um, I don't really think much about it other than it's the number one cryptocurrency. Beyond that, I don't even pay attention to it. I was just gonna say, I know China is probably the number one Bitcoin owner. So again, another Chinese owned thing that I want to stay far away from, and they are doing it because it circumvents the U.S. dollar. So whatever they can do to circumvent the U.S. or oppose the U.S., they're going to do. It's not that they're trading it or making money off of it. It's they're the ones producing it. They're the ones with the massive mining farms. They control, I think it's 70 or 80% of the mining of Bitcoin cryptocurrencies. Russia is about 10 or 15%, and then the rest of the world is just random people like you and me, or people pooling together, pooling as in, POOL, pool. They pull together their resources so that they can get their blockchains added into the blockchain. right? It's a block. It's not a chain. It's just a block until it gets added to the chain. Then it becomes a blockchain. You can only get it added to the chain um, when you've got massive amounts of block to add. China's manufacturing tons and tons of cryptocurrency or um, Bitcoin specifically, and now it requires so much in a block to become part of a chain. Yeah, I don't know about that either because it's not a stock. It's more like a currency. So if anything, it would be forex. You know what I'm saying? Like it's not it's not a company. So there's no way it's going to get. I mean, is the U.S. dollar or the Swiss franc or the Japanese yen or the Australian whatever? Are any of those in the SPY? No. So no, I can see that like an ETF for crypto, maybe, but you know, it's not going to be in the SPY. The SPY is oh, it could be like a S&P crypto ETF. I can see that, yeah, because there's multiple ETFs for the S&P. Yeah, so I can see them creating an ETF to put in and be described as the SPY crypto ETF or the Dow crypto ETF. Yeah, I can see that. Potentially, man. I mean, look what Tesla did when it got announced that it was going into the SPY. So, I mean, but I don't know it. Well, you can't think like that because then I wish I bought Amazon. I wish I bought Apple. I wish I bought Netflix. I mean, I had the chance to buy Netflix at $20 a share, and I had 5 grand to do it with, but I didn't do it. Like if you think like that, you're always going to be harping on things you should have or could have done, and you could be rich, but you're not. Instead, I would suggest concentrating on how to get rich and think of the future and the present because those types of things, that type of feeling is going to hold you back or hold you down. So don't let that control your emotions because when you do, then you make mistakes. I know I do. So if I do, then I would assume others do. No one is a master of controlling their emotions. Everybody's going to at some point, no matter how good you are, emotion's going to get the best of you. Well, tomorrow is Friday. I mean, you still think it's Wednesday? Oh no. I hear you. I don't normally get off till midnight myself. All right. Anybody else got questions? SRNE. Sorrento Therapeutics. Uh, I mean, it's in an uptrend. It's having trouble getting through 825 resistance. I think if it breaches 825, it should go up to maybe 10, 10-ish. I mean, it has a couple of small resistance levels prior to that, but they're weak. I can't imagine that it would have trouble getting through those. Looks like someone's asked me about this before because I got some lines already drawn on the chart. Yeah, I mean, I think this is in a good position to keep going up. You too. All right. Not sure why they're falling. Well, so I really like Moderna better than Pfizer. Um, well, I think Pfizer and Moderna specifically are going to keep going up. You've got the vaccine stuff going. It sounds like you probably got in a little late. Um, oh, so then they should be in profit. Why are you still holding? Why are you still holding the ones expiring tomorrow? Because Friday's coming. Because that expiration date's coming. Well, I mean, you might see it bounce too, but I think you're going to see it fall because it's at a very high. Um, this is only about 30% drop from that high as far as the wave goes. Um, Long term, they're going to keep going, in my opinion. But never hold to expiration. Never let anything ride that long. Always get out, especially if you've got multiple contracts. Start shaving them. You can let one ride, but don't let all four go. I see. Well, realistically, what I would have done, you said you've had them for a month. I would have been out of them all probably, honestly, a week ago. But right, okay, so by Monday, Tuesday, or Wednesday, that would have been a great time to get out. I would have probably shaved one contract Monday, another one Tuesday, another one Wednesday, and I would have let the fourth one ride. Right, that's the best way to do multiple contracts. Shave them as the price goes up, and then you can potentially let the last one just ride. You're welcome. I mean, I do that with shares too. Like with Tesla, I had 75 shares, and I've been shaving them. Now I've got about 45. I think it's 45, 28, 38, 48. I got about 56 or so, and I've been shaving them as they've been going. As it's been going up, I'd sell one, sell two. Just shave it as it goes up. Yeah, yeah. No, I mean, I agree with that. I mean, I bought Moderna when they had their first pump, and they hit like 89. Like, so I bought Moderna, and my break even was like $67. And I sold them at 87. So they hit 89. I had a trailing stop on it, which was around 87 something. And it initiated my trailing stop. I made 400 bucks and I moved on. And then I looked at it the other day and it was $180. And I'm like, shit. Yeah, I mean, it happens, right? But as long as you're making money, that's really what matters. And just make sure you shave stuff as it goes up, especially if you got multiple. Don't hold everything. Don't even unload half at one time, like one at a time. It's the best way to make money. You're welcome. Okay, good night. Go ahead. I can hear you. You don't. Experience, um, understanding what you're doing, why you're doing. When you say charting, what exactly are you talking about? Okay, charting patterns are not easy. It's going to take a lot of experience and a lot of trial and error. So chart patterns are not easy. That's, in my opinion, that is not, that's something that you should be doing after you know how to do other types of technical analysis. That's kind of like a intermediate to advanced analysis. Support and resistance and trend. My channel has videos on that, specifically support and resistance. Depends on your time frame of trading. There's a lot of things that go into that, and what I do isn't necessarily going to work for what you want to do. Um, 30-day charts maybe, five day 15-minute to trade with, 30-day to 60-day to look at support resistance levels and trend. There's an education channel here that shows a lot of different type of chart patterns. I suggest you familiarize yourself with them and understand them. I mean, there's just so many. I think you should pick one and just learn it and just do it. And then when you really know how to do it, then you can branch out and start looking for other types of patterns. But if you're only like if you try to attack all these patterns at one time, you're not going to know any of them. You're not going to remember any of them. You're going to get confused. So there's just way too much to try and absorb at one time. So like maybe pick like Head and Shoulders and inverse Head and Shoulders, stuff like that, or like a cup and handle, um, some kind of wedging. I mean, like I said, chart patterns is for more advanced traders. So the way I suggest it is chart analysis. That's where beginners need to start. Support and resistance, trend, and then you move into price action and volume, and then you move into um, technical indicators. You're going to have to experience those to see if they're going to work for you or not. And then you move into chart patterns. And then once you know chart patterns really well, then you can move into candlestick patterns. So there's multiple layers and levels here, and if you try to do too many at one time, you're gonna paralyze yourself. Support and resistance, yes, I have videos that I made on it. So if you look at the pins, you'll see that I pinned those. Okay, you're welcome. I don't see it, no, but it's not to say that it's not going to happen for everybody. I mean, if you're seeing that, they're not just going to be like, "Hey, we're gonna shut you down." You know, it's probably Discord wide. Oh, it's not going to kill you to take a break for a day. It's probably a good thing. Just get out of your positions with profit and relax the rest of the day. It's always good to take a step back. When you start getting emotional, you should step back, anyways. All right. Good luck with that. The more diamond your hands become, the more emotion starts to take play. Well, I mean, if you put a strategy in place and you stick to it, emotion is rarely going to become an issue. But the moment you start deviating from a strategy, that's when emotion starts to kick in. And when something goes beyond the bounds of your rules, you should not question it and just follow what you've always followed as far as your rules go. And you'll minimize. That's part of risk management. So yeah, your plan goes out the window once emotion kicks in. All right. Um, Anybody else have any questions before I head out? Okay. Well, if you don't know, if you're new to everything, including options and stocks and all that, do not trade options. Okay, that's the first thing. Second thing is learn how to read the charts. And again, I've got two videos in my channel about support and resistance. That's a good place to start. Oh, it's hard to say. I've been doing this 12 years and I still don't know everything. What I can tell you is learn the terms, learn the vocabulary. I mean, learn the concepts, learn simple chart analysis. Um, you're gonna have to learn a bunch of stuff. There's no real easy way to go about doing it. There's no real trading learning plan. It's everybody's different. This isn't something like this is probably the reason why this type of stuff is not in school, because every person is different. Everybody has their own interests, and they're going to approach things differently. You're going to learn differently. You're going to learn at different speeds. So there's not one thing or a specific path that I can say, do this, and this, right? There's just too much for me to and like I said, everybody's different. So what would work for me may or may not work for you. But I can tell you, you start on my videos, my 2 videos of support and resistance. That's a good place to start. And learning vocabulary. That's another good thing to know. Because if you don't know what market orders are, you don't know what a bid-ask spread is, you don't know what volume is or open interest or any of those things, those are good things to know. If you don't know them, then you should probably, you not probably, you should not be trading until you understand that stuff. Well, I mean, I assume you know something. Yeah, I mean, the correct path is having the interest, the determination to continue to learn. As long as you got that, you're going to get where you need to get. And you're not going to find what you're looking for today or tomorrow. It took me 9 years to find what I've been looking for, right? So, well, actually, no, I'm sorry, 7 years for me to find what I was actually trying to do and become successful. In that 7 years prior, I was losing my ass, right? I mean, there are some things that I did that worked, but they took a long time. What took me 3 years to make $36,000, it took me 6 years back then. So, I've increased the profit making. I've learned how to make money faster. It's still not fast. It's not like options where you get in today, you can make $1,000 if you're lucky. I mean, I think that's really the best way to put it is if you're lucky. Um, but the types of things that I do, it could take me a month or two, but I'll see a 45 or a 50% return sometimes, or even 100 or 200%, depends on which ticker I got into, and a lot of dependencies. But it's going to take you time. In 3 or 4 months, you're just not going to learn. It's impossible to learn everything out there. I mean, like I said, my name says never ending research underneath it. That is as close to the truth as possible. I'm always researching, always finding things that may or may not work, always finding new strategies, and 95% of them don't work for me. So don't let yourself get discouraged. Let's say that, because you will. You're gonna get to a point where like you lost some money and you're like, shit, I'm just gonna quit. And I've thought that. I've been in that position, and then I realized, well, if I quit now, because the better part of me was like, well, quit while I'm ahead, even though I've lost, I'm still ahead. But then the other part of me is like, well, you know what? If you quit now, you're being a little bitch. Stop being a little pussy bitch and keep going. Be a man. Stand up, brush the dirt off your shoulders, and keep going and keep learning. Because if I stop learning, then what's the point, right? So I'm very critical of myself, and that's the only way like I'm gonna succeed in my mind is to be hard on myself. And when I'm hard on myself, then I can psych myself out and be like, all right, I'm not gonna be a weak little girl. I'm gonna be strong and I'm gonna keep going, even though it's hard and it's tough, right? So I mean, I could honestly argue that that's something that you could just use in life in general, whether it be in college or a job or a relationship with someone, anything, right? Um, but with stocks, it's you have to you just gonna have to keep going and not give up when you hit a bad rut. Um, to end with that, I would say that um, there's a saying, there's a quote from Robert Kiyosaki that says, "Statements close the mind, questions open it." If you always ask yourself questions, you always question things, you're always going to start looking for answers. But if you only just make statements, you're just going to stop yourself right there. My wife's really bad at this. She'll be like, I can't do this. It's too hard. Instead of saying, how do I do this? How can I overcome this hard ass shit? How can I be successful? How can I, how? Now she just instantly goes, I can't do this. So it ends right there. It doesn't get any further from that moment. And she's still where she is, right? I love her to death, but she's tried so many things, and she'll get into it, and they'll be like, "This is too hard," and the next thing you know, she's back to doing nothing, And I'm like, never gonna get anywhere if you keep telling yourself you can't. Yeah, of course. Sorry, that wasn't really directed at you. I'm not saying you're a quitter or anything. I get into these rants though. Yeah. Okay. So does anybody else have any questions or anything? Sure. Yes. Yeah, I think it is. But mm, let me see. It looks like it's at a resistance point. Yeah. I would say though that I think it has some strength to keep going. Just because the last time it hit its high, um, it didn't have anything behind it. This time it's hitting a high and it's got 737 Max potentially being back out in business. So if it, I would say if it breaches where it's at, yeah, you might want to cut your losses. Yeah, there's nothing stopping it from moving past where it's at now. Maybe at one point, maybe right here at 285. Yeah, it's huge. So your contract's going to be worth nothing at that point. Fraction of what it's worth today. 10%. Yeah, I would definitely consider that for sure. Don't keep riding it hoping that it's going to fall. And if you do cut it, and then it runs up a little bit more past of where you cut it, wait for a little bit of red, then maybe that's a good entry for a call. Yeah, I mean, that the thing I don't like about that indicator is it can say overbought and then it can just stay up there for a month, so that's one thing I don't like about some of these indicators. Yeah, I mean, if you look at the MACD on my chart right now, it's actually bouncing off of that tan line. And when it so if you see over here where it hit its high, it was really far apart from that tan line. Yeah, it's really tight right now. So even though it's above that purple line is your bullish slash bearish territory, right? And that's a neutral point. Even though it's above that and it's pretty high up above that, the two lines are right next to each other. So to me, that says this is probably going to keep going. I think there's a more chance of it breaching that resistance level than falling because I mean there's just a lot of things that support that. Yeah, I agree with that. Yeah, I mean, and like I said last time, and even when you look at the big drop here, look how wide those two lines are from each other. Huge width. So when you see it do this, man, I'd say that's a good time to buy puts, maybe. I do not. I mean, I think that's one of the better indicators, though. So like MACD, ADX, stochastics, and maybe Bollinger Bands, maybe out of majority of the indicators, those I think are probably the better ones. Um, and standard deviation channels, which is what I have on my screen. Yeah, I would probably not bother with it because analysis paralysis. There you go. Yeah, that's not a bad idea. I mean, you want to learn something new? Have at it for sure. Yeah, I mean, like I said, I think specifically Boeing, it's got a good chance to keep going. I mean, you got to remember, it's not even back to its normal price of 300 some dollars, so it's got a big chance of doing that. Maybe not right now, but it's going to take a little while, but it'll get back there at some point in the future. You're welcome. Okay. Um, who else? Anybody? All right, I'm gonna stop the recording.